We'll bring you our interview with rival Johnson & Johnson. Matt?
All right, let's take a look at European futures right now. We have stronger gains just minutes away from the, or 1 minute away from the open in FTSE futures than we do in the continental futures. You can see FTSE futures here up 0.6%. DAX futures only up 0.25%. So with that, let's take a look at the global macro movers screen. It shows you a number of risk assets in each column. The far left column will show the equity indexes. It'll populate there as they open up. The FTSE opened first as usual, up 0.2%. And as I've been saying, it's a little bit easier for British stocks to gain when the British pound falls, as it's doing right now, under 129, trading at 128.95. There you see the IBEX up as well, substantially less, only 0.1%. The CAC 40 trading higher as well, 0.2%, as the FTSE continues to climb higher and higher, now gaining about 0.6%. So European markets opening generally higher. In the UK, the market opening even higher than what we see on the continent, even as the coronavirus continues to infections continue to increase and the problems continue to mount. Certainly in terms of deaths, we saw the most in the UK since June. Joining us now is Laura Cooper, Bloomberg's MLive macro strategist. And Laura, yesterday it seemed like the increase in COVID-19 infections was a real problem for markets. Today they seem to be shrugging it off to some extent. They're not exactly off to the races. But why do you think there's still a little bit of optimism somehow in these markets?
Well, I think ultimately, when we look at kind of what the narratives that markets are grasping at, those are little changed at this point in the fact that, they do still expect to see, this accommodative monetary conditions. There is still this kind of medium-term vaccine optimism that is prevailing. And as well, they do expect some kind of fiscal package. Whether or not that comes before the election remains to be seen, and that is unlikely. But certainly the fact that we are going to get ongoing support on those fronts continues to kind of bolster risk assets. And then we have a busy day of policymakers as well today. So that's likely going to kind of continue to drive this relatively optimistic market narrative.
Yeah, that price on the DAX, I think we're just waiting. There we go. The DAX just opening up now. It was showing yesterday's price for a little while, but just coming into line with other markets and getting off the ground. But we do see this outperformance by the London market, and as Matt's been saying, a lot to do with the latest Brexit lines. We spoke to Mark Cudmore earlier on, and he was saying international investors have sort of lost interest in what's going on with the Brexit trade negotiations, Laura. A little closer to London, though, do you sense that things are getting real? Does that mean things get real for UK assets, or do you think here in London as well, the chances of a deal or no deal matter little compared to the coronavirus, and also we're talking about a skinny deal increasingly here?
Well, I think it's really the confluence of factors. I think you're correct in saying that the outcomes between a deal Brexit and a no no deal Brexit are relatively slim compared to what we were talking about between deal and no deal, the last time things came down to the wire last year. And I think really crucially, that is going to weigh certainly on sterling is the pressure valve for a lot of these negotiations that are looking to not be able to pass this brinkmanship going forward. And I think really at this stage, we overlay that with just this increasing growth headwinds. So the UK continues to lag its peers in its recovery. It's recovered only about 2/3 of those pre-pandemic levels. And this is ahead of these potential renewed restrictions, these lockdowns that are going to further weigh on economic activity. So I think really when we take a step back and look at UK assets, specifically in the currency market, it looks like the risks are asymmetrically skewed to the downside because there has been a lot of this optimism built up that we're going to see a deal come down to the wire. And if that isn't the case, we're going to see kind of those downside risks dominate. And even if there is a deal, we're going to likely just see a short-lived reprieve on the currency front before, those growth concerns come roaring back to the radar.
I want to get to the question of the day. We were talking to Mark Cudmore about this earlier, and he said, bank earnings had become more important. You're asking how key are bank earnings for risk assets? He was talking about the last few years, but I think the banks are telling us so much. Certainly JP Morgan and Citigroup did yesterday.
Oh, absolutely. And I think, banks are crucially setting the tone. They're kicking off earnings season. And yes, it can be argued that this earnings season is potentially less relevant than last quarter just because we didn't have any kind of insight into what banks could actually be telling us in terms of guidance. But certainly what we saw from Citi and JP Morgan yesterday was, yes, they did beat expectations, but they are flagging these headwinds to come. So we are still seeing loan loss provisions remain elevated. They are still seeing the potential for deferred defaults going forward. And really the tone is that there is this uneven and uncertain recovery ahead that they want to prepare for. So I think that does set the tone for markets that, the all clear is not, the worst is not yet behind us, even though kind of we're seeing the economy recover after that unprecedented pandemic collapse seen earlier this year.
Yeah, it seems like it's going to be a long winter ahead, Laura. When you look at the way that the market responds to the latest virus and vaccine news, we, of course, had that disappointment from Johnson & Johnson, Eli Lilly, then the latest business to talk about their treatment testing and the way that has had to be paused, antibody therapy. What do you make of the way the market reacts to this? It's just a short pause. The market knows that these tests can get back into their stride. But what is priced in terms of vaccines? I ask this because some of the political voices in the UK seem to be increasingly downplaying the chances of a vaccine.
Well, I think that really is the case. I mean, certainly setbacks in clinical trials like we saw in the reports yesterday did remind investors that the prospects for a vaccine, could still have an impact on markets, whether that it happens before the election or after the election. Markets have pinned kind of expectations that we will see a vaccine eventually. That is largely priced in. So I think we're going to see these bouts of volatility on any kind of disappointment. But over the medium-term outlook, a vaccine is likely inevitable. Of course, markets are not yet focusing on the distribution of the vaccine, just how long that could actually take, the lengthy process and the number of issues logistically around that. But I think forward-looking markets are going to continue to pin optimism on those with just this roller coaster in terms of whipsawed on these headlines around the vaccine news.
Laura, thanks very much. Laura Cooper, Bloomberg Markets Live macro strategist. Thanks for setting us up for another trading day here in Europe. Coming up on the program, we will get to a really interesting conversation. We'll be speaking exclusively with Standard Chartered's chairman, Jose Vinales. Don't miss that conversation. That is next. This is Bloomberg. Welcome back to the European market open. 10 minutes into your trading session, down 0.2% on the European stock market as a whole. On the stock 600, that is. The FTSE 100 outperforms a little, up by 0.2%. Now, the Bundesbank has warned banks must be ready for increasing strains as a result of company failures. The central bank said the effects of the real economic crisis have not yet fully arrived in the German financial system. It added, that while lenders should be able to cope, projections remain highly uncertain.
Corporate insolvencies will increase. This will also lead to higher provisioning and losses with the banks. But the banks actually do have buffers available that they can use to buffer those shocks and to continue lending.
That was Claudia Busch, Bundesbank Vice President, speaking to Matt, my colleague, in fact. Let's talk a bit about the global recovery. Let's talk about the banking sector. We're joined for an exclusive interview by Jose Viñals, Chairman of Standard Chartered. Jose, very good to speak to you this morning. We were hearing a bit about the strains the banking sector is under, and we'll get to that in just a moment. Just in terms of the path to recovery out of the global corona crisis, do you see the path as smooth ahead or fairly arduous?
Well, thank you very much. The path of the recovery is not going to be smooth at all. I think that, the good news is that the recovery is in train already, and that 2021 is expected to be significantly better than 2020. It is true that there are still many uncertainties regarding when the vaccine will be available, how is it going to be distributed throughout the vast population of so many countries. So there are many uncertainties. So it would be a rocky recovery, but hopefully we'll get there ultimately.
You know, we heard from Claudia Busch yesterday that Germany, that the Bundesbank expects Germany to hit the high watermark in terms of bankruptcies in the first quarter of next year. We heard from JP Morgan yesterday that its consumer portfolio is going to really take material hits in the second half of next year. So in the US, in Germany, it seems everywhere the worst is yet to come. Do you see that as the case as well, economically?
Well, I think that if one thinks of growth is going to be positive next year, while it's negative this year. This year is the worst economic recession we've had since the Great Depression. It is true that a number of the problems that have been originated this year will only show up next year. So I don't expect that next year would be worse than this year in terms of non-performing assets. But I think that we're going to get more non-performing assets next year. And that's something which is going to differ very much across countries, because countries have a very different speed in terms of the recovery and very different strength. For example, if we look at China and other emerging Asia economies, according to the forecast that were published yesterday by the IMF, China is the only country with a positive growth rate this year, the only important country with a positive growth rate close to 2%, and next year is going to have a growth rate above 8%, while emerging Asia is going to lead the recovery. So I would expect that markets in emerging Asia are going to overall do better than markets in other parts of the world, even if you will have still challenged countries like India and so on. But I think that's something which very much depends on the geography we're talking about.
Yeah, it does seem as if, and certainly this was clear in the IMF report you referenced there, Jose, that China looks fairly exceptional at this point. When you think about Western economies, though, a number of voices have called for monetary and fiscal stimulus to not be withdrawn too soon. Where would you look where concerns you in terms of the withdrawal of that support being too early? Is that a worry?
Well, I think it's very important that what monetary and fiscal policies have done, which is to put a floor that avoids the economic recession to be even bigger. So I think that's very important. And going forward, you cannot prematurely withdraw any of this policy support, but you can only do it as circumstances improve and as you are more and more certain that you're going to have a really solid economic recovery. That's not yet the case, so I'm afraid that a lot of fiscal support will still be needed next year as well, and perhaps beyond that. And the important thing is that this fiscal support is used in the best possible way, making sure that you don't only support short-term growth, but also that you put the basis for a longer-lasting recovery, not a short-lived one.
One of the things that I was trying to get from Claudia Buch yesterday was, when are we going to get past the worst of it? And banks, rather than being kind of these emergency vehicles that governments are relying on to bridge this economic downturn with loans, when are banks going to be able to get back to being, companies that are run for a profit, owned by shareholders that get paid, specifically in dividends? When do you think that banks are going to be allowed to pay dividends again across, say, Europe?
Well, I think that that's something which is going to depend very much on what the economic situation in Europe is a few months from now. In the United Kingdom, we have been also subject to a strong recommendation by the prudential authorities not to pay dividend so far. What I hope is that as the economic recovery gets entrenched, that there would be more flexibility, and therefore that banks will be given the ability to pay dividends and also to initiate the share buybacks, which are another way of remunerating shareholders in a way which is consistent with their own economic and financial situation, inducing a lot of prudence. So I think that prudence should continue to be the norm in dividend policy, but I think that in a few months there should be more flexibility in terms of allowing banks to do things which are consistent with their own position.
And on that front, what are shareholders saying about these restrictions, Jose? Are they putting you under pressure? Are they putting regulators under pressure to allow you to pay dividends?
Well, shareholders don't like to have their dividends and their buybacks stopped. But I think that they need to understand that a few months ago there was sufficient uncertainty and even entropy that capital conservation was important. But banks have conserved capital, and we have now capital ratios which are significantly higher than a few years ago, which are higher than last year, and we have significant buffers. And I think that subject to, as I said, prudence in terms of capital conservation, I think that banks can use some of this excess capital they have to remunerate shareholders, because otherwise banks are going to have a very difficult task in convincing investors that they should come back to investing on banks if they cannot get any dividend out of it.
I want to seg across the Atlantic and get your perspective on what's going on in the U.S., Jose. There was an Institute of International Finance panel discussion on, or many discussions on what would happen if Biden wins versus Trump. And they concluded that they don't think China tariffs would change. The phase one deal would stay in place. I wonder what you think about the macroeconomic developments over in the U.S., the world's largest economy, and how they could be affected by the two different outcomes in the election.
Well, thank you. I think that in terms of U.S.-China relations, what you heard in the IIF panel is correct, in terms that the relationship is not going to change that much, in the sense that tensions are not going to come down significantly. What will be different is the way in which the China-U.S. tensions are managed in a more systematic, predictable, multilateral way under a Biden administration. I think that's the consensus now, and that's my view as well. Now, regarding the U.S. economy itself, I think that if President Trump wins, He would continue with the tax policies that he has had so far. He will keep taxes on corporates and the wealthy low or even lower. And there would be also some wish to have some additional stimulus package in order to better underpin the economic recovery. I think that if Biden wins, the fiscal action is going to be far stronger in the sense that there would be an increase in taxation on the wealthy and on corporates, not to bring it back to where it was before Trump tax cuts, but to an intermediate position. And that is going to help finance a very ambitious plan of infrastructure spending in things like, basic infrastructures, the environment, education, health, and all of those, I think, are going to give a bigger boost to the United States economy in the short term. And if this money is put in place as expected to do things that contribute to medium and long-term productivity, that's also going to have a positive impact on long-term growth in the United States. So there would be differences in the economic outcomes depending on who wins the election. Of course, the worst thing, I think, for the economy would be a contested election, which leads to a protracted period of uncertainty that may last a few months. And that is something which would be very detrimental for investment, for consumption, and for growth in the U.S.
Jose, looking ahead to the banking sector and how it charts a path through the current crisis, we heard yesterday from Larry Fink at BlackRock that the pandemic had led to, sure, a lot of fear, but it also meant that people were reassessing their finances and focusing more on the long term, and actually there might be some opportunities for the financial sector to help their customers plan their financial futures, and there seemed to be more interest from customers in doing that. Is that something that you're seeing?
Yes, indeed. I think that this pandemic has led to a renewed, interest in investment in a number of sectors, like digital, like health, but also people are more conscious about their future and planning for their wealth management on a more longer-term basis. And I think that that's an area which is an increasing opportunity for asset managers and for banks who have an asset management function. And we're seeing also a lot of that and investing on that. And more that's going to be conducted as a combination of human and digital sort of interaction. So we're going to a hybrid model also in terms of these sort of longer-term relationships with clients in terms of wealth management.
All right, Jose, thanks so much for joining us. Really appreciate your thoughts on a range of topics. Jose Viñals, of course, former IMF financial counselor, but of course now the chairman of Standard Chartered. Great to get some time with you. Now, coming up, everyone's getting ready for 5G. Even Apple now unveils its latest range of iPhones compatible with the technology. Will it spur a new era of growth for one of the biggest companies in the world? This is Bloomberg. Welcome back to Bloomberg Markets. This is the European Open. We are 25 minutes into the trading day and looking at gains of about 0.5% on the FTSE 100 in London. Elsewhere, kind of a mixed picture on the continent. But let's take a look at some of your movers here. A couple of British gainers. ASOS is one of them. I never exactly know how to say it because I never go into a store, because it's more of an online retailer. And of course, online retail has been doing great throughout the crisis. ASOS beat profits in its latest reporting period, and as a result, you can see, well, those shares actually down 6%. So maybe not beating as much as investors had hoped for them to do. It looks like Just Eat Takeaway. Could they decide on just one name? Just Eat Takeaway is gaining 4.5%. Those shares up as more people, of course, are ordering in. And then Atlantia, you can see that stock up 7.5% as well, agreeing to Autostrada talks in Italy, and that could be a profitable contract indeed. Coming up, we're going to take a look at more on what's going on in today's markets. Welcome back to Bloomberg Markets. This is the European Open, 30 minutes into the trading day right now, and we're looking at a stock 600 index that is fairly little changed. You can see it's been up. It's been mostly down. In terms of the industry groups that are leading and losing, really, take a look at the group ranked return screen on your Bloomberg terminal. You can see automakers and auto parts are gainers, banks, as well as construction and material. Interesting that banks are gaining, considering what we saw happen yesterday in the U.S. On the loser side of the equation, travel and leisure down again today, real estate down again today, and utilities falling as well. Take my word for it, or type in SXXP Index GRR Go. For now, let's get the Bloomberg First Word News from Laura Wright. Laura?
Thanks, Matt. In the UK, Prime Minister Boris Johnson is facing growing pressure to order a national circuit breaker lockdown. The opposition Labour Party is calling for increased nationwide restrictions for 2 to 3 weeks. That's after documents revealed the government's own scientific advisors called for the action 3 weeks ago. The sprint to find a medical breakthrough to contain coronavirus stumbled this week. Eli Lilly is the latest company to pause a trial out of safety concerns. It's developing an antibody therapy to help those with severe cases of COVID-19. It follows a similar move by Johnson & Johnson after a trial volunteer fell ill. Prospects for U.S. fiscal stimulus before Election Day are waning. House Speaker Nancy Pelosi is calling on the White House to revamp its latest offer. Senate Republican leader Mitch McConnell is pushing for a smaller-scale strategy that Pelosi quickly rejected. McConnell's proposal also appeared to be opposed by President Donald Trump, who tweeted, "Go big or go home." BlackRock boss Larry Fink says the world could be a lot greener if office buildings never reach full capacity again. Speaking at an IMF event hosted by Bloomberg, he said if only half of workers returned to the office, traffic could be reduced and quality of life improved. He says companies could rotate staff so 50% are always working from home. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Anna, Matt.
Thanks very much, Laura. Laura Wright in London. Now, Apple has unveiled its new iPhones, promising they'll be thinner, lighter and faster, with long-awaited 5G technology included. It hopes the launch of the iPhone 12 will spur a new era of sales growth.
Each generation of cellular network technology on iPhone has enabled breakthrough innovations and entirely new opportunities for our developers and our users. And 5G is the most exciting step yet. For so many people, this all becomes real with 5G coming to iPhone.
Joining us now, Amanda Lyons, GAM Investments investment manager, looking at the tech sector. Thanks very much, Amanda, for joining us. So when you've seen what Apple has announced, and you've seen the difference that these new phones will make, will it be enough of a difference to drive a new super cycle for Apple?
Well, most of the announcements that were made last night were pretty much expected by the market, so there wasn't really anything new. So we think about sort of sales going forward and is it going to be the new super cycle? There wasn't really anything massively compelling to make people think, right, I've got to go out and change my handset. The thing most people were focusing on was the 5G, but that feels more in the category of nice to have rather than must have. Even Apple, when they were doing this sort of glitz and glamour production and announcement last night, they didn't really show you any killer feature or killer app that's going to make you think, you know what, I really need to have a 5G enabled handset. It's something that you're going to need to have in the future, but right now the infrastructure is not really there. For the general consumer that's going to get one of these handsets, they're not necessarily going to see a lot of benefits. I thought one of the things that was very interesting on the call, and it was sort of a throwaway remark almost to some extent from Tim Cook, was that he said your handset will automatically shift to 4G to preserve your battery life, unless you were using something that definitely needed 5G, so maybe some real-time hardcore gaming app at that time. So even if you're in a 5G network area and you have a 5G handset and you have the phone carrier bill that's going to allow you to have access to 5G, you still might be getting 4G speeds. So you're not going to actually see that benefit right now.
Yeah, exactly. I mean, I remember, You know, 20 years ago, when Ron Sommer at Deutsche Telekom was showing me how 3G was going to allow me to stream videos, and it was such exciting technology, of course, that's only really started to be possible like last year. How long until 5G is really going to change the way or improve the way we use these devices?
Well, if you look at sort of the build-out, the infrastructure build-out of 5G, we're probably a couple of...
Oh.
Looks
Apparently
as if we've lost Amanda, Matt.
She wasn't on a 5G line. This just shows you the pitfalls, Anna, and the reason that we need to improve our telephony technology. Sometimes these lines just drop. You know, you can't keep somebody on the telephone. It's never assured.
We'll sort out the telephony.
Yeah,
Let's talk about ESG investing themes as well. Legal & General plans to turn up the heat on companies to cut their carbon emissions. Up next, we'll get into that conversation. We'll be joined by Legal & General's head of sustainability. They've got some new plans to broaden their reach and their impact on the green agenda. This is Bloomberg.
So can I ask you to do me a favor? Suburban women, will you please like me? Remember? Please. I saved your damn neighborhood, okay? The other thing, I don't have that much time to be that nice. You know, I can do it, but I gotta go quickly. We don't have time. They want me to be politically correct. Oh, yes, let's discuss it. Let's talk about it over the next 10 years. No. Now, we saved suburbia in the U.S.
I'm running as a proud Democrat, but I will govern as an American president. I work for Democrats and Republicans. I work for those who vote against me as hard as those who voted for me. That's the job of a president, to heal. It's a duty to care for everyone.
That was President Trump and his Democratic rival, Vice President Joe Biden, hitting the campaign trail yesterday in the crucial swing states of Pennsylvania and Florida with some different messaging from the respective candidates. And it seems like they were in quite a different setting as well. I don't know, but I'm going to guess from the Nat sound that Joe Biden's campaign rally was, in fact, a drive-in rally, because you heard all of those horns honking. Just 20 days to go until the election. Let's get the Bloomberg Business Flash now. For that, we go back to Laura Wright in London. Laura?
Thanks, Matt. The great technology debate, serial upgrades or inertia? Well, Apple has unveiled its latest range of iPhones. It's a product line that Wall Street expects will kick off another cycle of sales growth. Its new iPhone 12 will have a 6.1-inch screen. It starts at $799 with a smaller version at $699. The lineup also includes a 12 Pro and the 12 Pro Max with a 6.7-inch screen, Apple's largest ever. Tencent is said to be planning to increase its stake in Universal Music Group by a further 10%. Sources tell Bloomberg the Chinese tech giant will make the move before its option expires in January. Last year, the company led a consortium that bought 10% of the world's biggest music company from Vivendi. It valued Universal Music at 30 billion euros. The world's biggest cinema chain is considering bankruptcy. Sources tell Bloomberg it's part of a range of options for AMC Entertainment as it tries to ease its debt load. That's as the pandemic is keeping moviegoers from the big screen and hampering studios in making new movies. No official comment from AMC. Fidelity Investments plans to hire 4,000 people over the next 6 months. It says the new hires will be in areas including financial advisors and customer services. It will mean a 15% increase in client-facing roles. The money manager is adding new clients and seeing existing clients save more as many of its peers struggle. That's your Bloomberg Business Flash. Matt, Anna.
Thanks very much, Laura, for that. Now, Legal & General plans to turn up the pressure on companies to cut emissions. The asset manager has said that it is committed to engage with more than 1,000 companies responsible for over 60% of the greenhouse gas emissions produced by publicly traded companies. Joining me now is Miriam Omi, Legal & General Investment Management, Head of Sustainability and Responsible Investment Strategy. Miriam, really good to speak to you. So this has come out of an earlier program that's some 4 years old. So you have some experience of this and you're now broadening it. I know that as a result of the earlier program, you divested from ExxonMobil, for example. Do you have examples of companies, though, that through engagement, you changed behavior rather than divesting? How has that worked out?
Absolutely. What we have seen in the last 4 years is that engagement with a consequence model really works. So not only we've seen that the companies who got put on the sanction list improved, such as Dominion, which is a utility company in the US, which, unfortunately wasn't really disclosing a lot about climate risks, now committing today to be net zero. So we have seen that kind of change from that list. Similarly, without being on the sanction list, many companies have improved through the engagement. Now, obviously, it's important that many other investment managers are engaging, and we are collaborating on that. But from our perspective, we want to make sure that we bring out the right results. So the focusing on the results and the consequences where we distinguished.
How much of a draw is this for investors, Miriam? I mean, how much of a hard line do investors want their fund managers to take when it comes to ESG?
So what we're seeing from our client base is that ESG is increasingly in terms of demand and interest, and not just in terms of our engagement programs and voting and so forth, but in terms of funds. Every day we're talking to clients about climate. And I think what we have moved on from is, is this an ethical issue? Is this the right thing to do? To, hang on a minute, isn't this an investment risk for me? Can you manage it for me? Or there are a lot of opportunities that we can exploit. So can you make sure that you do that in your investment? So really the conversations are getting richer, and we think it's going to get even bigger.
You, as part of your engagement then with businesses, Miriam, you've put together this traffic light system. Do you hope that this becomes some sort of standard for the industry to measure the level of disclosure, the level of transparency that companies have around climate? Because I know that the advisory company Sustainability says there are more than 600 different ratings and rankings for ESG. It's a bit of a wild west, really, when it comes to for investors to try and really understand climate risk.
Yeah, so data providers like Sustainalytics and Bloomberg have a lot of data points, but it's important that for some companies that what we as investors are using in a way that we assess them. So what we did is we traffic lighted about 1,000 companies on our website based on what we think are the key metrics that could be applied to something as big as 1,000 companies. So it's not everything. It's the kind of data that are common, global, and consistent. So the companies can understand how they're seen from the outside world through the use of the traffic light system. So we are writing to companies today sort of saying some of the areas where you are kind of being flagged up as red, you really need to start addressing because these are minimum standards. And that will start to get escalated through our voting program next year. But we are also doing engagement with some of the key companies as well. Talking directly with the companies is very, very important. So this isn't necessarily instead of engagement, this is additional as our commitment to be transparent in a way that we engage with companies.
Miriam, how active do you get with the companies that you invest in? I know you have a master's degree in environmental decision making. Do some executives, need you to give them advice on how to run their companies in 2020?
How to run the companies, but we make sure that the boards of the companies are addressing a wide range of risks and opportunities, including climate change. So what we are not advocating for is somebody with a PhD in climate to sit on the board. That's not really the point. But we want to make sure that there's expertise on the board looking at, technological changes, policy and regulation changes, consumer demand, because these things are changing very fast, particularly as we're going towards this net zero transition of bringing the global emissions down to near 0 point in the next 30 years or so. And so I think board needs to be really diverse in bringing those expertise into the conversation of the board. And for that, we obviously, as an investor, make sure that that is happening, that we get comfort that the governance is in place.
And in terms of that diversity of the board, Miriam, how far is the business, is Legal and General Investment Management prepared to go then if it doesn't think that a particular board is on its path to what you define as suitable levels of diversity?
Sure. So, there's many different aspects to diversity. In particular, on gender, we have been engaging for a number of years, being part of association like 30% Club and so forth. And as a result of our effort and other investors' effort, we have seen that in the UK, on average, there are more than 30% of the board being held by women. And we've seen that kind of similar trend in the US and elsewhere. So that's because we started to vote against chair of the board for not having any female on the board or having less than 30% and so forth. We are expanding that this year to ethnic diversity. Now that's been traditionally difficult because there aren't many data points to really assess hundreds of companies on that. But what we have said is that we will start to engage with companies. We have sent letters to many of the companies, and then we will start to escalate through our voting policy as well. So what we will have is by 2022, we will vote against board for not having any non-white person on the board.
Miriam, thanks so much for joining us. A subject I think all of our viewers are interested in now. Miriam Olmi is a Legal and General Investment Management Head of Sustainability and Responsible Investment Strategy. Now, clinical complications, Mount Eli Lilly added to the list, Johnson & Johnson also, those two becoming the latest companies to pause their COVID trials. We'll bring you our interview with J&J next. This is Bloomberg. Eli Lilly has become the latest company to pause trials for its COVID-19 antibody treatment. This comes just one day after Johnson & Johnson halted its vaccine trial because of a sick volunteer.
With respect to details around the pause, a temporary pause on our vaccine candidate trial, there's very little in terms of details known at this point in time. We were informed about 36 hours ago. That information was then elicited from the or by the Independent Drug Safety Monitoring Board. That data is blinded to us at this point in time. It's really up to that independent group to determine what will be unblinded. We've had significant confidence going into the vaccine trial itself. As you may recall, we've tested 100,000 people on this particular platform for Ebola, Zika, RSV, and HIV without any serious health consequences and very well tolerated. So we're confident. We just have to let the process play out. And hopefully the public's reassured that we're following the highest scientific, medical, and ethical standards that we do for all our drugs. And that's certainly true for Johnson & Johnson, and I very much believe it's true for all our pharmaceutical counterparts.
Yeah, and we saw that with AstraZeneca too. One of their studies had to be halted while they assessed some patient issues. But it hasn't yet still been approved by the FDA to continue, but it can continue in other countries. And I just wonder if you could help us understand the procedure globally as you're testing the vaccine in many countries as to what stops, what moves forward, how quickly that can happen.
Yeah, so Alex, I won't speak specifically on AstraZeneca's compound. What I can say from our perspective, though, the details are still being finalized to find out about the patient. It's a 60,000 person study, which is the largest of any vaccine trial being currently conducted. It's probably not uncommon to expect unexpected illnesses that occur, and that's what's happened here. So we're going to let the board do their study, do their diligence, and then we'll proceed accordingly. We've been in contact with the FDA as well as other health regulatory authorities around the world, so they're well advised as to what we know at this point, and we'll certainly work in lockstep with their direction as well.
Joseph, can we talk about the timeline a little bit?
Sure.
Alex Gorski, your CEO, has said in the past, and I'm quoting here, that he would expect the vaccine to be available late this year or early next year. Is that timeline still the one you're working to, or do you think the risk is it gets pushed out further than that?
Yeah, so Guy, I think the best way to answer that as the CFO is to say we're not changing any investment plans to expand our manufacturing footprint, so we're planning for success with that same timeline in mind.
That's a fair point to make as the CFO. On the same lines, though, I wonder if you could give some insight into Johnson & Johnson's conversations with regulators, for example. A lot of the conversation and confusion in the market comes from the fact that we don't know if we trust a vaccine and who's going to vet it and how do you know if it's safe to take, et cetera. What's your conversation?
So our conversation has really been to keep them advised of our scientific protocols. We're being transparent not only with the regulatory authorities, but also the public at large. We have a very detailed website which outlines our design protocol, our study results, our enrollment as that gets posted. So we're being very transparent. The public, I would hope, would look at today's temporary pause and, again, be reassured that we here at Johnson & Johnson, and I believe across the industry, are following every proper safety protocol guideline to its utmost degree.
That was the Johnson & Johnson CFO, as he made clear, Joseph Wolk, speaking to Bloomberg's Alex Steele and Guy Johnson. Interesting conversation there. The temporary pause at Johnson & Johnson bumps on the road towards a vaccine. And as we know, we've heard even more recently from Eli Lilly around their treatments, the fact that they've had to pause enrollment in their antibody treatment tests as a result of an illness there. So we'll wait for further updates on both of those fronts. European equity markets then, as we come to the end of the first hour of trading this Wednesday morning, look fairly flat, actually. The Euro Stoxx 600 is fairly flat. The FTSE 100 outperforms just a little bit. A lot of that often has to do with where the pound is sitting, and we have certainly had some Brexit headlines this morning to deal with that have weakened the pound. That is it for the European market open. Stay with Bloomberg Television. Up next, it's surveillance and their ETF focus. This is Bloomberg.
shiny new apples, the tech giant unveils its latest range of iPhones. Now with 5G speed, Wall Street expects the new offerings will kick off a new cycle of sales growth for the company. Calls for a circuit breaker. Pressure rises on UK Prime Minister Boris Johnson as daily virus cases surpass 17,000. Fresh restrictions hit European countries as infections spike. And watching Wall Street, while Goldman Sachs, Bank of America and Wells Fargo report later today. This after JP Morgan and Citi shares fall despite surprising on the upside. Well, good morning, everyone, and welcome to Bloomberg Surveillance. I'm Francine Lacqua here in London. This is what the markets are focusing on. So a lot of the focus, of course, is on the bank results that we had yesterday. Many more banks reporting today, together with the technology stocks and that Apple news. So we're expecting a lot of earnings. At the same time, we're looking at, for example, pound weakening, something that we need to keep an eye on. And if you look at European stocks, travel shares declining on concern of more lockdowns, but financial shares are actually climbing. Now, coming up later today, our active ETFs worth the money. A new survey says more than 40% of active equity funds underperformed in the first half of this year. We'll debate active versus passive in our weekly show, ETF IQ Europe, and that's in 30 minutes from now. Let's get straight to the Bloomberg First Word News. Here in London with me is Leanne Gerrans. Hi, Leanne.
Good morning, Francine. Here in the UK, Prime Minister Boris Johnson is facing growing pressure to order a national circuit breaker lockdown. The opposition Labour Party is calling for increased nationwide restrictions for 2 to 3 weeks. That's after documents revealed the government's own scientific advisors called for the action 3 weeks ago. Now, the sprint to find a medical breakthrough to contain coronavirus stumbled this week. Eli Lilly is the latest company to pause a trial over safety concerns. It's developing an antibody therapy to help those with severe cases of COVID-19. It follows a similar move by Johnson & Johnson after a trial volunteer fell ill. Prospects for U.S. stimulus before Election Day are waning. House Speaker Nancy Pelosi is calling on the White House to revamp its latest offer. Senate Republican leader Mitch McConnell is pushing for a smaller-scale strategy that Pelosi quickly rejected. McConnell's proposal also appeared to be opposed by President Donald Trump, who tweeted, "Go big or go home." And BlackRock boss Larry Fink says the world could be a lot greener if office buildings never reach full capacity again. Speaking at an IMF event hosted by Bloomberg, he said if only half of workers return to the office, traffic could be reduced and quality of life improved. He says companies could rotate staff so 50% are always working from home. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Thank you so much, Leanne. Now, Apple has unveiled its new iPhones, promising they'll be thinner, lighter, and faster with long-awaited 5G technology. It hopes the launch of the iPhone 12 will spur a new era of sales growth.
Each generation of cellular network technology on iPhone has enabled breakthrough innovations and entirely new opportunities for our developers and our users. And 5G is the most exciting step yet. For so many people, this all becomes real with 5G coming to iPhone.
Well, joining us now is Alex Webb, our Bloomberg Opinion tech columnist. So, Alex, great to speak to you this morning. So what exactly are the major upgrades that consumer might find attractive?
So we've got 4 new phones here. The sort of iPhone 12 sort of standard version, which will come in 2 sizes, both of which have 5G, and then the Pro versions also both have 5G, and interestingly have a LiDAR sensor on the back, which allows a better range detection, improves photography, but also, it allows more sort of augmented reality placement of objects in the phone's field of vision. Those are sort of the headline innovations, so to speak. A few other little things around the edges, a charging wireless charger on the back, which also has a magnet in it, allows you to attach various things to the phones. We've kind of reset our expectations to what we think of as being a sort of game-changing innovation. The biggest step is clearly 5G, but at the moment there aren't all that many applications for the technology. It might allow for slightly faster download speeds, but at the moment that isn't necessarily going to be something that's going to significantly change people's experience.
So, Alex, how big of a selling point is a faster 5G iPhone for Apple? I mean, I need to upgrade. I'm not sure what to do.
the moment, there aren't that many 5G networks. So frankly, it doesn't make a big difference. They will come over the next sort of five, even 10 years. But, you know, the actual need for 5G isn't there yet. It's basically a way of trying to convince people to spend a bit more money on their phone. But maybe slightly less the case in China, which has significant 5G networks already. There are already something like 400,000 5G antenna across the country. It's going to be 650,000 by the year end. In the US, we're talking, you know, sort of single-digit thousands. In China, you also have competitors, Xiaomi and Huawei, Oppo and Vivo, who all have 5G phones on the market. So if you're a consumer going, well, what am I going to get? A phone with 5G or without? I might as well go with. Now, that in China is an argument you might want to make, less the case in other parts of the world.
Alex, thanks so much. Alex Webb there from Bloomberg Opinion, talking all things technology. Now, coming up, hitting the pause button, Eli Lilly halts its antibody trial because of safety concerns. We discuss that and the state of COVID in Europe next. This is Bloomberg.
It is critically important that the markets stay open in this time, as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
Economics, finance, politics. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now let's get straight to the Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Tencent is said to be planning to increase its stake in Universal Music Group by a further 10%. Sources tell Bloomberg the Chinese tech giant will make the move before its option expires in January. Last year, the company led a consortium that bought 10% of the world's biggest music company from Vivendi. It valued Universal Music at 30 billion euros. Now, the world's biggest cinema chain is considering bankruptcy. Sources tell Bloomberg it's part of a range of options for AMC Entertainment as it tries to ease its debt load. That says the pandemic is keeping moviegoers from the big screen and hampering studios in making new movies. No official comment from AMC. And Fidelity Investment plans to hire 4,000 people over the next 6 months. It says the new hires will be in areas including financial advisors and customer services. It will mean a 15% increase in client-facing roles. The money manager is adding new clients and seeing existing clients save more money as many of its peers struggle. And that's your Bloomberg Business Flash. Francine.
Leanne, thank you so much. Now, hopes for a quick virus cure take yet another hit. Eli Lilly is the latest to halt the clinical trials of its antibody therapy because of safety concerns. Shares fell on the news. Now, it follows Johnson & Johnson hitting pause yesterday on its trial after a patient illness. Several European countries are also taking steps to control its record surge in cases. New restrictions are being added and citizens are being called to make sacrifices. Bars and pubs are closing from today in the worst-hit parts of England as the UK Prime Minister Boris Johnson faces growing pressure to order a national circuit breaker lockdown. Well, joining us now is Melanie Baker, senior economist at Royal London Asset Management. Melanie, thank you so much for joining us. We heard actually from the IMF at the IMF World Bank with their World Economic Outlook that when you look at the economy, maybe it's a little bit better than expected, or certainly they revised upwards, but we have so much concerns about, some of the downside risks. Do you see those risks crystallizing?
I think that this was always going to be a difficult phase, a slower phase of the recovery. We had this super strong initial phase of the recovery driven by reopening, with help from policy and pent-up demand. This was always going to be a slower, more difficult phase of the recovery. We knew there were probably going to be setbacks on the way in terms of COVID, and that's very much what we're seeing. I think it's in line, in a sense, with many economists' forecasts of a sort of bumpy period now before we get a vaccine. But it comes back to the points you were just making around a vaccine. That is, getting there is really important for a normalized phase of recovery then next year.
When you look at some of the things that worry the market, where are we going to see the most scarring in the economies?
So one area clearly I think most economists are worried about is jobs, around permanent job losses. So you can see, although if you look at the US numbers, for example, you can see they're improving, the unemployment rate is falling, jobs are being added, but you can also see under the surface that permanent job losses are rising. So that's certainly a concern. I think one of the other worries that certainly that I have is around balance sheet damage as well. So the amount of debt companies are having to take on just to get through this crisis, and how that then goes on to limit the recovery in investment and in hiring as we go forward.
Melanie, when you look at some of the things that the markets look at, are they a bit too detached to what economists are seeing longer term for some of the pressures that could happen if we have a second lockdown or just further restrictions?
No, it's an interesting point. I don't think so. I think markets are looking quite long. Markets are looking sort of a little bit through, in some senses, some of the bumps, or have been. Economists are doing a mixture of things, right? Are worried about that near-term bumpy picture for the economy, but also looking ahead and assuming that at some point this pandemic will be over and we will go back to a sort of sense of normality. But I think economists and markets are thinking about some of these longer-term possible impacts as well, and whether this pandemic actually, just accelerates some of the structural changes that we have been seeing. Things like, the move to online shopping, these sorts of things.
Melanie, let's also talk about the U.S. election, and let's talk a bit about politics, because, of course, it's 20 days until the U.S. election. Both President Trump and former Vice President Joe Biden hit the campaign trail yesterday in the crucial swing states of Pennsylvania and Florida with very different messages.
So can I ask you to do me a favor? Suburban women, will you please like me? Please. I saved your damn neighborhood, okay? The other thing, I don't have that much time to be that nice. I can do it, but I got to go quickly. We don't have time. They want me to be politically correct. Oh, yes, let's discuss it. Let's talk about it over the next 10 years. No. Now, we saved suburbia in the U.S.
I'm running as a proud Democrat, but I will govern as an American president. I'll work for Democrats and Republicans. I work for those who vote against me as hard as those who voted for me. That's the job of a president, to heal. It's a duty to care for everyone.
Meanwhile, U.S. stimulus talks remain deadlocked as Nancy Pelosi demands the White House revamp its latest offer. The House Speaker says a proposal of a $1.8 trillion package, quote, falls significantly short of what's needed. Let's get back to Melanie Baker, our senior economist at Royal London Asset Management. Melanie, if you look at some of the stimulus needed for the U.S. economy, are you worried that we'll fall short of that? And again, what does that mean for inflation expectations going forward?
No, but it has already fallen short, right? So I think there was a lot of expectation earlier in the year that at least by July, we'd have another fiscal package to carry on once the CARES package expired. So it's already fallen quite short in that sense. And you already saw in the August personal income numbers a fall in personal disposable income, which was about the fall in unemployment benefits. So I think that disappointment in a sense has already happened. But I think there is widespread expectation that once we are through this election period, maybe it'll have to wait till January, but there will be another fiscal package in the US. I think that's certainly built into my expectations. But clearly there are risks for now, and it's looking increasingly unlikely we're going to get anything before the election here. So it is a near-term worry, certainly for consumer spending. And in terms of inflation expectations, I think again, so long as there's an expectation that this will come through at some point next year, I think that's okay. And in the meantime, we have seen a lot of action from the Fed to try and bolster inflation expectations.
Melanie, if we go back to the type of recovery that we're expecting worldwide, are we too pessimistic or too optimistic with forecasts?
That's a good question. It depends on who you ask, right? There is certainly still quite a difference in view. But if I look at the forecast published by the IMF yesterday, for example, they're not far off mine. They're not far off the kind of forecast that a lot of economists are expecting, which is, we've had that initial V shape. Now things get a little bumpy, but once we get a widely available vaccine, once life can return to normal, this is a recovery that's going to take more quarters than multiple years to get back to at least pre-crisis levels of output.
When you look at some of the Asian countries, are they going to, if we looked at some of the export numbers out of China, are they really going to do a lot better than the US and Europe in the next 12 months?
Oof, that's quite a difficult one. So, I mean, certainly China has benefited here from, I guess, fiscal stimulus elsewhere, and also, producing a lot of the things that the world has been demanding in terms of medical equipment, PPE, etc. Now that's not necessarily going to last through to next year, and there are of course still issues around trade relations, US-China trade relations, which may upset things as we go on to the future years. But I don't see a reason why, the US is a very dynamic economy. We get fiscal stimulus next year, we get a widely available vaccine. I don't see why we won't see actually quite a strong recovery ultimately in the US.
Melanie, is the biggest concern of the markets is that actually there's some kind of runaway inflation because of all the stimulus, that it surprises us, and that we'll have a lot of the stimulus from central banks taken away more quickly than we think. How likely is that? Is it something that you're completely writing off, or you're just monitoring in the next couple of quarters?
The sort of runaway inflation risk, it's something. It's something I'm monitoring. It's not something I've built into my central case forecast. And part of the reason is because I'm assuming that this current relationship between monetary and fiscal policy, where there's an element of coordination, where they're both kind of putting maximum stimulus into the economy, that doesn't last. That we have still got independent central banks that, when inflation starts to just get a little bit out of hand, will actually reverse course and start raising rates. Now that's naive, but that's certainly where I'm coming from at the moment. But absolutely, we've seen such a huge amount of stimulus in the system, and we have seen changes in approach from monetary policymakers. It is certainly something that monitors watching.
Thank you so much, Melanie Baker, there, senior economist at Royal London Asset Management. Now, coming up, Bank of America and Goldman Sachs earnings are on deck. How will they stack up to the big lenders we've heard from so far? We'll discuss that next. This is Bloomberg. This is Bloomberg Surveillance. I'm Francine Lacquet here in London. Now let's talk about bank earnings. And JP Morgan and Citigroup are reporting better than expected earnings, or they reported better than expected earnings yesterday, but shares of the group were actually down. Well, joining us to discuss all of the earnings season is our Danny Berger. So Danny, why were investors disappointed in some of the bank results yesterday?
Francine, the sentiment really turned while executives were speaking on their earnings call. At first, people were excited that JP Morgan and Citi collectively reported loan losses that were half the amount that was expected. But really, they made clear that it wasn't a fundamental change on their view on the economy. Instead, they had set aside a lot on the first half so they could afford not to do as much in this quarter. Also, they painted a picture of an economy that's a slow grind to recovery. JP Morgan CFO really emphasized this on the call. She said that they expect some significant charge-offs when it comes to 2021. Until then, it might be something feeling more like a pause. This kind of commentary is certainly going to be the focus when we hear from Goldman Sachs and Bank of America today.
Citi, Danny, fell more than 2 times as much as JP Morgan yesterday, though. So what's exactly behind that?
Well, Citi not only faced questions on the economy, but some of their higher costs and regulatory scrutiny. One analyst said, can we be sure that Citi won't be the next Wells Fargo in terms of regulatory pressure? Another analyst asked, why, Mike Corbat, aren't you leaving sooner? Why not put Jane Fraser, the coming CEO, in now to show you're willing to make a clear change? So some very, very strong words there in the analyst call, Francine.
Danny, thanks so much. Our Danny Berger there with the very latest. And of course, yesterday we also had asset manager BlackRock reporting. Now, coming up, are active ETFs worth the money? A new survey says more than 40% of active equity funds underperformed in the first half of the year. Now, we'll debate active versus passive in our weekly show. That's ETF IQ Europe. That's coming up next. In the meantime, a lot of the focus is on earnings. Our Danny Berger just talked about some of the bank earnings. We have more bank earnings today. Wells Fargo, Bank of America a little bit later. And then European stocks are a little bit mixed. Travel shares declining on concern over more lockdowns. Financial shares actually climbing. Treasuries and the dollar pretty much steady. This is Bloomberg.
Another day of risk off across the financial markets. We bring you special coverage of all the price action and implications here on Bloomberg Television.
I was actually poor.
No foreplay?
Eat your bag of Lay's with a smile on your face.
If all the diseases have been taken, I'll take a tax.
Welcome to Bloomberg ETF Europe. I'm Francine Lacqua. Over the next 30 minutes, we'll be your guide to the region's thriving market in exchange-traded funds, everything you need to know about the funds and the flows. relatively disappointing. A new survey says 42% of active equity funds underperformed in the first half of 2020. We'll ask if the way to profit is to stay passive. Morgan Stanley's $7 billion bet on direct indexing. We'll ask if the sector is set to expand and look at the pros and cons for investors. And thanks, Jay Powell. After a rocky start to 2020, bond ETF inflows have already topped last year's total. We'll discuss what's next for fixed income products. First up, let's take a look at which countries and sectors have been attracting the money. Here's our Danny Berger with the details. Hi, Danny.
Hi, Francine. That's right. I've got FFLO up, and this looks at ETFs that track European assets. Over the past month, we've seen net inflows to the tune of nearly $900 million. Now, this comes as a lot of strategists are starting to say that perhaps Europe is going to be one of the more attractive spots going forward with the U.S. election as Democratic candidate Joe Biden widens his lead in the polls against Donald Trump. Berenberg, for example, saying a more calm trade policy would benefit Europe and prevent any sort of transatlantic trade war. Goldman Sachs, for its part, saying a weaker dollar should the Dems sweep would allow a stronger cyclical case in Europe. Now, looking at the individual countries, Switzerland hitting the top. We recently heard from the Swiss government who upgraded their economic outlook, so perhaps some of that positivity reflecting through ETFs. Now, we have seen a lot of equity ETFs start to see inflows in Europe. For most of the first half of the year, it was mainly fixed income. But if you look at the top three here, which we have United Kingdom, Germany, and Italy, these inflows actually do have some more fixed income tilt to them. Italy especially, Italy really seeing a strong outperformance of their region's bonds, even being able to offer a zero coupon bond, which investors scooped up. Now, the opposite story, though, is coming from Spain. Spain, you'll see on the bottom here, third to last, seeing about $21 million worth of outflows. That is mostly coming from fixed income products. Spain government bonds really outperforming over the past month or so. So you can definitely see that reflected here in the ETF flows. Francine?
Thank you so much, our Danny Berger there with the very latest on what's happening in the ETF space in Europe. Now, joining us is Raphael Stern. He's head of ETF portfolio management EMEA at Invesco Asset Management. Raphael, great to have you on the program. What kind of flows have we seen, and what kind of flow trends are you expecting from now until the end of the year?
Good to be here. Thanks, Francine. So it's certainly been an active year for ETFs in Europe. We've seen recently a lot of sector flows that's both into technology and financials, which is likely positioning from clients into a volatile Q4, where not necessarily the entire market may perform as good as some specialized sectors. So we've seen some tactical asset allocations into that. We've seen decent flows into gold. Obviously, it's been a very strong year, and we've still seen about 400 million into gold last week. We've also seen in fixed income across government bonds on the emerging market side about 400 million. Euro is 200 million, and also gilts, obviously with Brexit coming up, some interesting positioning opportunities.
Raphael, when you look at some of the volatility out there, and this could be U.S. election, this could be just a volatile winter season because of infections, how does that play out in the ETF space in Europe? Are you going to see more appetite for products that actually help you with volatility?
Yeah, I think there's two parts to this. One, obviously the European ETF market is growing very rapidly. We've seen about 10 to 15% product growth every year. We now have 1,800 ETFs to choose from, and I think this specialization and niche type of products is going to continue. Invesco has a very strong, innovative product suite, and we actually recently just launched Euro hybrid corporate bond ETF, similar to our AT1 products and preferreds, where you can play very targeted parts of the capital structure to express your views. Of course, our synthetic sector suite is also a very good tool for investors to use if you have specific views on certain parts of the market. Now, probably a lot of investors who may not be as actively monitoring each parts of the market, I think it's important, especially from a passive perspective, to get market beta as cheaply as you can, to have a diversified exposure across both equities and fixed income. And I think ETFs have helped investors to do that in the most efficient and cost beneficial way.
Raphael, thank you. Raphael Stern there from Invesco Asset Management stays with us. Now, coming up, S&P's survey comparing active funds versus passive is out. So, is it worth paying the fees? We'll discuss that next. This is Bloomberg. This is Bloomberg ETF IQ Europe, everything you need to know about the funds and the flows. I'm Francine Lacqua. Now, many investors expected the dramatic volatility we saw earlier this year to create widespread opportunities for active managers. But a new survey says over the first 6 months of 2020, 42% of active equity funds in Europe underperformed. According to S&P's SPIVA, or SPIVA, Europe scorecard over a 10-year period, that proportion rises to 87%. Well, still with us, Raphael Stern from Invesco Asset Management. Raphael, how do you actually see that going forward, the passive versus active debate?
About 900 billion in active versus 318 billion in passive. So we clearly think there's a use for both, depending on the situation. Of course, if you decide to pursue an active strategy, making sure you have the right manager and the right expertise and as part of your solution is key. And the statistics are very clear that after fees, it's very difficult to outperform versus a passive index in many situations. Now, of course, there are opportunities to outperform via an active strategy. I just think investors need to make sure that if you have some plain vanilla beta exposure, they consider using a passive vehicle to do so, and ETFs are great and diversified, inexpensive ways to express beta views. But the active on kind of the satellite of your investment allocation can certainly be beneficial. And I think we've seen a trend of really the space between active and passive become a little bit more blurred, where you have a lot of smart beta ETFs, more innovative ETFs and strategies coming to market where the strategies can be quite narrowly defined in terms of exposure, where in the past it was either or. And I think now there are some tools available to investors where you can get the benefit of both.
Raphael, does this trend only change, for active investments once there's normalization of central bank policy?
Yeah, I think obviously there are opportunities with central banks in the market. It gets a little bit more difficult to find outperformance opportunities because the central banks tend to buy most of the market. But of course, with the volatility we've seen in March, with what's happening in the world with US election, Brexit, COVID, there are many opportunities to tactically outperform. I do think for the average investor, probably having a diversified basket of exposure to various markets is probably a safe bet.
Raphael, let's also switch topics. Morgan Stanley is taking a big bet on direct indexing. Its $7 billion purchase of Eaton Vance has propelled the Wall Street Bank to a market-leading position in the category. But what exactly is direct indexing, and what are the advantages? Well, here to explain is our Danny Berger. So, Danny, hi again. What is Morgan Stanley so interested, or why is it so interested in direct indexing?
Francine, some people have called direct indexing a possible ETF killer, and it's not surprising that Morgan Stanley would want a product like that. Look, its asset management business has been very much so under pressure from passive and low-fee products. So to explain direct indexing, instead of buying an ETF, you actually invest in each individual company that's in the index itself. This has a couple advantages. For one, in the US, there's some tax advantages to doing so, but really the appeal globally is a very customized index. Let's say you don't like one company in it because it doesn't fit your ESG protocols. That means you can take that one out. But the question will be, does this allow Morgan Stanley to compete with ETFs? It's going to be very difficult for them. These direct indexing products have taken somewhere between $3 to $5 billion in this year, and that compares to $350 billion in ETFs. So yes, it's a very steep battle for Morgan Stanley, but what they do have the advantage of with acquiring this Eaton Vance product, which is 60% of Eaton Vance's assets, it allows them to grow bigger. Having that economy of scale allows this product to be cheaper, and really the flows are going to cheap products, Francine.
Danny, thank you so much. So let's get back with Raphael Stern from Invesco. Raphael, when you look at some of the things that Danny was just mentioning, again, is this a trend that's only going to accelerate?
Well, I think it's important to clarify as well that direct indexing is very different from self-indexing because a lot of times there's confusion about the two. I think direct indexing, it may very well be the right product for some investors. However, I think it's not a product that will be adopted across the market, and there's a few reasons for that. One, ETFs are there for the benefit of scale, and by the fact that direct indexing is a uniquely custom solution, you definitely lose the scale. When you lose scale, you lose liquidity, and there's no doubt that ETFs can offer a lower cost solution compared to a custom direct indexing vehicle. Now, having said that, it's early days in that market. Quite frankly, I think not many investors are aware of what it is, but I think the ETF is a cleaner solution. It's a more tested solution, and it's a deeper market where you already have a plethora of products that you can choose from, whether those are self-indexing, whether those are smart beta, active or passive.
Raphael, how do you look at liquidity in ETFs? Is this the biggest concern going forward?
I think they have certainly done extremely well and proven the vehicle, the wrapper, has proven itself again in March. Really, all the ETF is a wrapper for the basket of securities that are inside it. If you have an index that is designed well with liquidity in mind, so do you have a minimum amount outstanding filter? Do you have certain sectors that are not liquid enough to be in a certain benchmark? So once you do this initial stage, you arrive at a product that has an investable universe, and it's really, no matter the size of the ETF, the liquidity is defined primarily by the depth of the market and the underlying securities. Now, that's your first layer. And then you have this entire ecosystem of market makers and authorized participants that actually make markets and that see offsetting flows of buys and sells. That all helps the individual investor in having tighter bid-ask in an ETF than if you were to go out to the market and try and buy the underlying securities individually.
Right, but overall, Rafael, is there, if you look at liquidity, and that kind of ties it back to the initial conversation we had, volatility, how's it different from ETF market, which is a lot more fragmented in Europe compared to the US market?
Yeah, that's true. The European market is more fragmented, and of course, we have a market size of about 1.1 trillion compared to nearly 5 trillion in the US. Now, having said that, there are a lot of players very active in Europe. I think it's one of the markets poised for the most growth in the coming 3 to 4 years. And actually, over the next 5 years, we expect the market in Europe to almost double. So I think the liquidity is really a question about each underlying product and how well it's designed. It's hard to generalize liquidity of ETFs in general, but it really goes to product design, underlying markets, and then having the right structure. And I think ETFs, compared to any other wrapper solution, are best placed to benefit from that liquidity.
Thank you so much for joining us. Rafael Stern, their head of ETF portfolio management, EMEA at Invesco Asset Management. Now, coming up, Powell's picks. Since March, the Fed has bought 16 different corporate bond exchange trade funds. That's propelled the fixed income ETF market to a record $170 billion inflow so far this year. We'll discuss the market next. This is Bloomberg.
Climate change is the defining issue of our time, so we've redefined how we cover it. With clear data and rigorous journalism, we rise to the scale of the challenge to reveal the breadth of possibility. We look at stories from every angle to provoke debate, spotlight solutions, and make sense of the greatest crisis of our generation. Bloomberg Green, solutions for a changing climate.
It
It is critically important that the markets stay open in this time, as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
This is Bloomberg ETF IQ Europe, everything you need to know about the funds and the flows. I'm Francine Lacqua. Now let's focus on fixed income. Back in March, things were looking pretty bleak for exchange-traded funds invested in bonds, and then the Federal Reserve stepped in. On March 23rd, the Fed announced that it would begin buying corporate debt ETFs, and so far this year, inflows to bond funds have totaled $170 billion. That's more than $154 billion invested in all of 2019. Well, joining us now is Michael John Lytle. He's Chief Executive Officer and founder of European fixed income ETF provider Tabula Investment Management. MJ, great to have you here with us today. How are you expecting it to pan out for fixed income ETFs into 2021?
Good morning, Francine. Thank you very much for having me on the show. You know, fixed income has seen a constant growth in inflows over the past several years. The ETF space was definitely created as an equity-focused market, but over the last couple of years, fixed income has seen outsized inflows. This year, for example, about 40% of inflows have been into fixed income, bringing the current average 28% of AUM higher, closer to 30. I think the bigger issue for investors in the fixed income space today is really around volatility and what's going to happen in the last couple of months of the year. We have a lot of events threatening the market, including the U.S. presidential elections, concerns about inflation, questions about defaults in the bond markets, all raising basic issues going into year-end. As you know, year-end is the time when we see volatility, we see reduction in liquidity of the markets. And so people, I think, are very much looking to protect themselves against year-end uncertainty.
But MJ, when you look at fixed income, as long as the Fed stays put, or actually as long as the Fed, remains supportive, do you see anything changing for fixed income? So are you just looking at inflation expectations?
I think the Fed purchasing ETFs in the U.S. is great. It's another central bank recognizing the value of the wrapper as a way of investing in the markets. The Japanese central bank has been doing the same thing for a number of years. They've bought an enormous amount of equity through ETFs. The ECB has not done this. The ECB is specifically focused on the underlying assets. So I think it's helpful that the Fed has recognized the ETF wrapper as a way of investing in the fixed income markets. I think the bigger issue really is the liquidity of the underlying assets in the fixed income space. And the ECB has been obviously has had a big buying program in place on the underlying corporate and government bonds. That is supportive to the overall fixed income markets, and then that feeds through into the way, obviously, an ETF as a passive vehicle delivers exposure to that underlying market.
MJ, where do you see the biggest value in fixed income, in the fixed income space? And again, we've also seen, some other central banks, certainly here, maybe in Europe or the UK, also looking at the ETF space.
Yeah, I mean, searching for value, there are a couple of different challenges for investors at the moment. Obviously, yield is one of the biggest challenges. If you look at the G10 government bonds in the 10-year space, there are only a few that actually deliver positive returns, and the vast majority are zero or negative at this point. As a result, the credit markets, which trade on a spread to the government markets, also offer a limited amount of yield, particularly the investment-grade market. So the first challenge in the fixed income space for people has been finding yield without taking too much volatility. As you know, the number of defaults this year has spiked significantly. We've seen it both in the U.S. and in Europe. And so people need to find a way to reduce their volatility but still increase their yields. I think the second challenge that's kind of raised its head, in particularly in the last couple of months, has been the prospect of inflation. Now, we have to remember that investors have a very wide range of views on inflation. There are investors who are believing that deflation is still on the horizon, a Japanese-style outcome for the markets, and there are people who are significantly worried about inflation in the U.S. of course, we had Chairman Powell come out and change people's views on inflation, saying that the Fed was actually effectively going to push up their target, saying that recognizing that although they'd had a 2% target for the last 10 years, they'd actually only achieved 1.5%. So he basically suggested he could go to 2.5% in order to bring up inflation to 2%. Now, he argues that we need a certain amount of inflation in order to keep the markets functioning properly. The concern the rest of the market has is that there have been a number of factors dragging on inflation for the past 10 years, and there's new things coming to light, such things such as reshoring, the basic breakdown of the global economy, where people are moving production back into their own countries, and all of these things can potentially increase inflation organically. And if you include that in combination with a central bank approach that's trying to increase inflation, they may not have complete control over the outcome. So I wouldn't say that people are panicked, but that they are certainly starting to talk about and be concerned about inflation, whereas it's kind of been off the table for about a decade.
MJ, thanks so much. Michael John Lytle there, Chief Executive and Founder at Tabula. Now that's it for this week's Bloomberg ETF IQ Europe. We'll be back with more next Wednesday, 9:30 a.m. London time. And this is Bloomberg.
Another day of risk off across the financial markets. We bring you special coverage of all the price action and implications here on Bloomberg Television.
shiny new apples. Well, the tech giant unveils its latest range of phones, now with 5G speed. Wall Street expects the new offerings will kick off a new cycle of sales growth for the company. Calls for a circuit breaker, pressure rises on UK. The Prime Minister Boris Johnson as daily virus cases surpass 17,000. Fresh restrictions hit European countries as infections spike. And watching Wall Street, Goldman Sachs, Bank of America, and Wells Fargo report later today. This after JP Morgan and Citi shares fall despite surprising to the upside. Well, good morning, everyone. Happy Wednesday. A lot going on in the markets. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Tom Keene readjusting his tie in New York, so he's all ready to start the Surveillance Marathon.
20 days.
Tom, the focus, of course, is on U.S. politics. We'll have Leslie Vandermeer shortly, but the focus is also on what Apple will become.
Well, you know, Apple's there. I mean, I've been answering my phone. 2 iPhones broke at the Keene household last night, and we're going to lead with this today. We're going to change things up a little bit, folks. And instead of like the markets and, of course, the NASDAQ roar that we've seen ties into Apple, but this was actually, Francine, a huge deal yesterday. Arguably the biggest meeting they've had in 3 years. And we're not going to go Apple fanboy on it and explain all the stupid, you know, this, that, and the other thing. But I really want to go into with Alex Webb, sort of the racket that they've got where everybody has to upgrade because this is old technology. This phone is a failure.
But Tom,
I have to get rid of
without being
it.
Fanboy, or fangirl, I think the question I've been asked the most is, do we have 5G here? And people just don't know yet, right?
Exactly.
And that will make an impact on whether you upgrade or not. Let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Prospects of another stimulus package before Election Day look bleak. President Donald Trump and Senate Republicans are at odds. The president is urging them to, quote, go big or go home. But Senate Majority Leader Mitch McConnell is only committing to a vote on the paycheck program for small businesses. Meanwhile, House Speaker Nancy Pelosi is demanding the White House revamp its latest offer. She says it's just not big enough. Meanwhile, the world's top central banks are urging governments to keep spending. They say that concerns about mounting debt should be put aside until the economic recovery from the coronavirus is complete. The IMF is normally a champion of budget restraint, but the fund agrees that it is too early to end support. Now, here in the UK, there's growing pressure on Prime Minister Boris Johnson to order a circuit breaker lockdown. The opposition Labour Party and government scientists say it's needed to get the coronavirus under control. Deaths have soared to their highest levels since June. Concerns are mounting that Johnson's new system of restrictions are just not enough. And Russia has ruled out a deal with the US on nuclear weapons before the presidential election. The deputy foreign minister dismissed a call by Washington for a freeze on their arsenals as unacceptable. The last agreement limiting the nuclear weapons of the former Cold War opponents expires in February. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine, Tom?
Leanne, thank you so much. Of course, get out the calendar. December 31st beckons in the United Kingdom, the EU heating up with some serious headlines. One of them coming out right now. Great Britain signals it won't walk away from European Union trade talks immediately. That's a good feeling to know. There'll be some other headlines out here through the day in these important meetings that, frankly, Francine knows a little bit more about me. Sterling moves on this action, 129.39. Right now in the data, let's get to it quickly. Green on the screen here. There's some oddities in the market, but the major theme is NASDAQ up. The NASDAQ 100, not the composite. I'm quoting SPX up 16 points. That's a nice big move, 0.4%. This is a new number to get used to. On the screen, 12,140. That's a quote we usually don't give. That is the NASDAQ 100, and that's what the pros are watching right now, lit up by technology. You'll hear me talking about that a lot more. I do want to know Turkish lira, another ugly day, out to 7.95. For somewhat, Francine, we're on the 8 lira to the dollar watch.
Yeah, Tom, just going back to that British pound, so it did erase losses after the headline crossed the Bloomberg terminal saying the UK has signaled it won't walk away from EU trade talks immediately. Why this is important, because there's that 31st December deadline, which you rightly said is the big one, but then there was this self-imposed UK deadline of tomorrow, the 15th of October, where they said if we haven't had enough progress by then, they would walk away. So this seems to them actually going against what they had initially decided. And what I'm hearing from insiders, even at Downing Street, is that we think there's a call between Boris Johnson and the Commission President today. So Boris Johnson now taking this in hand himself to try and push a way forward. So pound weakening, and then just quickly, if you look at treasuries and dollar, they're pretty much steady. A lot of the earnings will move some of the European stocks, which is why in my data check we also looked at European stocks, including financial shares up, leisure shares down because of extra possible restrictions or lockdowns in economies. Now, Apple has unveiled its new iPhone 12 models, promising that they will be thinner, lighter, and faster with long-awaited 5G technology. It hopes the launch will spur a new era of sales growth.
Each generation of cellular network technology on iPhone has enabled breakthrough innovations and entirely new opportunities for our developers and our users. And 5G is the most exciting step yet. For so many people, this all becomes real with 5G coming to iPhone.
Well, that was Apple Chief Executive Tim Cook at this virtual product launch event yesterday. Joining us now is Alex Webb, Bloomberg's opinion tech columnist. Alex, I mean, it might be a beautiful looking phone. It might be an interesting phone. It might be something that people want. But if I don't have 5G right now, why should I get it?
Yeah, it's a very big ask. There are some features in there which, are incremental improvements on the previous generation. I actually think that the best thing is the fact that it no longer has, because it has the flat edges, that means that it doesn't taper at the edges, and therefore the phone is a lot sort of less likely to crack. That's probably the best sort of jump out feature in my eyes. But 5G, if or when it comes, sure, it'll be useful, but it's not going to be a game changer for consumers anytime soon.
How quickly is 5G coming, Alex? I mean, I know it's different if you're sitting in London than if you're sitting in New York and than somewhere else. But does this bring back the 5G conversation at the forefront?
I think the 5G conversation is about China. But in the UK, we have better 5G than other places. We still don't have much at all. US has far less proportionally than the UK or many places in Europe does. But in China, they have 400,000 5G base stations already. They're going to have 650,000 by the end of the year. They've already sold 98 million 5G phones on China Mobile. This is really a play to get the Chinese market. In order to compete in China, Apple, I think, clearly feels that it needs to have a 5G phone, even though there aren't that many consumer applications of 5G technology yet.
Alex, I want to get away from the fanboy stuff. The miracle of all this are the chips. And I was flabbergasted a few days ago when they talked about the new A14 chip doubling operations per second, and the number of transistors is up roughly a quarter, maybe a third as well. How does Apple do that? Why do they do that and no one else can do it but Apple as they move the A14 chip out to the public?
I mean, it's, I think, partially a question of capex. Apple has deeper pockets than anyone in the world when it comes to R&D. And as we know, silicon is the most intensive piece of the R&D jigsaw in tech. They have huge teams working on this, not least in Israel. They've done some very canny strategic acquisitions of chip companies. Most recently, one from Intel. We're going to work on their own modems. They strategically place some of their R&D labs to be very close to the leaders in this space, and I think that really helps them when they build on the kind of ARM architecture.
Is anyone even close to the, using as a general statement, the AX Bionic chip path? Is there any equivalency? Is Samsung even remotely close to just the rigid, every year a leap condition in chip engineering?
Yeah, I mean, Samsung is a far bigger chips company than Apple is, and Samsung's stuff, I think, is broadly comparable. Look, each chip has its own pros and cons, right? And then Samsung, they do this at a scale which Apple doesn't quite yet. And Apple uses a lot of Samsung chips. There is in some models, there's an assertion that actually Samsung makes more money from the iPhone than it does from its own phones because it has so much silicon content in the iPhone.
Francine, what Alex just said there is so profoundly important, that Samsung does better making parts for the iPhone than they do playing around with their own less profitable stuff.
I really learned something, Tom. I don't know what chip is in my phone, but I certainly will find out, hopefully, in the break. Alex Webb of Bloomberg Opinion there joining us on the latest Apple products. Coming up next, Leslie Vinjamuri, Chatham House head of U.S. and America's program. We, of course, talk U.S. elections 20 days away. This is Bloomberg.
You see coming, some things you don't. The trick is to be ready for anything. John from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
Good morning, everyone. Bloomberg Surveillance, Francine Lacroix and Tom Keene. Thrilled you're with us. A news flow really extraordinary. Futures up 15. Dow futures up 101. That puts it at 28,686. The new thing we're watching, that NASDAQ 100. Are you ready for this? 35% of the NASDAQ 100 is three stocks: Apple, Amazon, and Microsoft. 34.x%. And so you can find that on the Bloomberg terminal. Right now, you can't find Leslie Vinjamuri's world on the Bloomberg terminal. You can in news, but it's not like, data. It's about politics and the raw emotion of what's out there right now. She's head of the U.S. and America's program. Leslie, I want to trot out a quote from your new study here on maybe what we'll see, not after the first Tuesday of November, but sometime in the vicinity of February 1 as well. It will not be lost on Vice President Biden, then President Biden, if he's elected, that the last two British prime ministers have gone out of their way to humor Donald Trump. Yes, they did. As a proud Irish American, Biden has already warned that he will take a dim view of any UK moves around the completion of Brexit at the end of this year, the risk undermining the acclaimed Good Friday Agreement of 1998. Leslie Vinjamuri, this is not on the radar of Pennsylvania and Florida, but it does address term 2 of Trump or term 1 of Biden. Will there be a stark difference to the United Kingdom?
Well, I think there will be on any number of things. I mean, that comment by Sir Peter Westmacott, the former UK ambassador to the United States, I think is a very important one. We've seen the Democrats pushing very hard on this question of the Irish border and its implications for the future of a US-UK free trade deal. But I think more generally, actually, I think if there is a change of administration, a change of leadership in the United States, that, Vice President Biden is an Atlanticist at heart. He's very likely to come over, spend a lot of time in Europe, and to expect a lot of Europe, especially when it comes to the very big question of China, questions of 5G technology, national security. He's going to want to see Europe cooperating with the United States in exchange for a much more present, committed America as a partner, not only in NATO, but on any number of issues, climate. So I think it would be a very big difference. Of course, Tom, we are weeks away from an election, and none of us know quite how that will turn out.
Well, to the election, Leslie, and of course the president in Pennsylvania yesterday, Vice President Biden in Florida, it is now that exhausting day-to-day grind. Just as an open question, North Carolina came up yesterday. Which state matters to Dr. Vinja Murray?
I mean, we're all watching Pennsylvania. I personally am watching Florida because what happens on election day is going to tell us so much, not only about which way the election goes, but how quickly it's decided. And I think all of us are very concerned that if the election result is delayed for several weeks, the potential for instability, unrest, contestation is significant. So I think Florida is the state that I'm really watching most, and it's very, very close.
Leslie, do you worry about turnout? And if turnout isn't great, does it automatically give Trump a better chance of winning?
Well, I retweeted this morning, David Wasserman at the Cook Political Report is anticipating a record turnout of between 150 and 160 million Americans. In 2016, by comparison, there were about 137 million Americans. So people are mobilized. People are passionate on both sides. They want to vote. The question, as we know, is, what will go wrong in the process of voting? The last day of voter registration in Virginia, there was a breakdown, dysfunctionality that meant a lot of people couldn't register. There are very long lines in many states. We've seen this just in the last day or two. There are all sorts of barriers to voting, but there's no doubt that people are ready to vote. They want to vote. They want to participate. America is absolutely energized by this election.
Leslie, what's the bracket or type of voter that President Trump needs to try and regain right now?
Well, it's been very interesting. I mean, what we've seen for the last 4 years is that President Trump has maintained that base, but he's gradually lost a number of other groups that were obviously very important for him winning in 2016. So right now he's pushing hard to get suburban women back. Remember that the 53% of white women voted for President Trump in 2016, but what we've seen in the current period is that the only female demographic that's really staying with him are those women who did not go to university, didn't go to college. The women who've gone to college have really begun to peel off. So he's fighting for the women in the suburbs. And there's also this, as we know, this ongoing push for who's really going to get the older Americans voting for them. That used to go to the Republicans and gone to President Trump before, and now it's very increasingly close. A lot of older Americans have shown that they are supporting Vice President Biden. So I think that is another really important battleground right now.
I mean, I look, Leslie, at where we are 20 days out, and of course the energizing platform. One of the distinctions yesterday in the zeitgeist was a president that has to get back on message, away from the entertainment of it, the theater of it, and yes, recovering from his illness, and get back to policy. What is the policy message of the President of the United States?
I think this one's really challenging because there has been so much distraction. And as we know, the number one issue in this election is the pandemic, the health crisis, the economic recession. I think for this president, he's really trying to say to Americans that he is the president who can deliver the economy, that he can bring the economy back. He's trying to suggest that Vice President Biden and Kamala Harris are too far to the left to do this, and that they will tax Americans and drive the economy into the ground. I really think he's still trying to campaign on the basis of being the president that really restores the health of the U.S. economy.
Leslie, do you believe in, this elusive triumphant voter that, may not be showing up in the polls?
That is a very interesting question. I mean, it's an unknowable. It's one of those known unknowns that we can't anticipate. I'm sure that there are some people who are reticent, whether it was President Trump or any other candidate, to openly state their political views. America, as we know, is as polarized as it's ever been. It is, I think a few years ago that the survey came out that said that people were more worried about their son or daughter marrying somebody from the other political party. It used to be somebody from another religion. Now it's, God forbid, if you're a Republican, that your child might marry a Democrat or vice versa.
That's
So
right.
it wouldn't be surprising if people didn't always want to say what their political views are. But the question is, how significant is that?
Great.
And I suspect that it's smaller than we.
She's a what?
Leslie. Leslie, thank you so much.
Leslie, thank you as always.
Yeah, Chatham House, head of the U.S. and America's program there. Now, coming up on Bloomberg Markets, the IMF chair and managing director, Kristalina Georgieva. That's at 10:30 a.m. in New York. That's 3:30 p.m. in London. And this is Bloomberg.
Women leaders were actually better at controlling the deaths from COVID-19. Do you think out of this pandemic, we'll see more countries be willing to elect female leaders?
When we look at women leaders, we tend to project on them baggage that they shouldn't bear.
Women are given an opportunity when no one else wants to do the job.
Women had a very clear objective. They wanted to save lives.
The women leaders, if you look at their careers, have also built up a level of trust.
In fact, women have to be better at communication in order to be elected as leaders, whereas this doesn't hold true for men.
We need to get those sexist stereotypes out of our head and give women a fair run for leadership.
Trying to change the stereotypes about women is not only the business of women, but men have to be part of it.
When everything around us, including the way we work and live, has been interrupted, uninterrupted service is peace of mind. Kimmy from customer support is responding to a 500% increase in daily call volume, no matter what. We keep on, so you can keep on.
Valuations, particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
Give you
you a sense of the real-time action. The 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
This is Bloomberg Surveillance. I'm Leanne Gerrans with this Bloomberg Business Flash. Bloomberg has learned that ConocoPhillips is in talks to buy rival Concho Resources. The company has a market value of about $8.7 billion. Conoco is looking to make a big bet on shale in the midst of an historic downturn in the oil industry. You'll not be seeing massive crowds at Walmart on Black Friday. The world's biggest retailer will limit the number of customers inside its stores to just 20% of usual capacity. Other changes include sanitized carts and directions to help shoppers avoid each other while browsing. And here in London, business chiefs are calling on the government to rescue the city's underground system. It's seeking a $7.5 billion bailout after the coronavirus pandemic led to a collapse in commuter travel. Transport for London also runs the London Overground and Docklands Light Railway. And that's your Bloomberg Business Flash. Francine.
Thank you so much, Leanne. A lot of the focus is, of course, on Brexit negotiations because we did have that self-imposed deadline of the 15th of October. It's tomorrow. It seems from the Boris Johnson side that actually he says they may not, they may decide to either extend or at least not leave straight away. No making hard decisions, I think, is how they're putting it. So it's having an impact on pound. I don't know if we have my data checked, but if we do, it'd be great to show it to see how pounds moved on the back of it. And you can see, there's quite a lot going on with leisure stocks down, but financial stocks here in Europe up, Tom.
Yields in the tuck as well, but really looking to the equity market, 28,691 on Dow futures right now, up 106 points, SPX up 15 points. And we're watching that NASDAQ to the moon. Of course, Amazon in the middle of their Prime Day. Joe Feldman of Telsey just out saying day one of Prime was extraordinary, up 0.3% on the NASDAQ 100. Isabel Mateo Silago of BlackRock. We do that next. This is Bloomberg.
कोरोना फैला हुआ है चारों तरफ। इस कोरोना के दौर के अंदर ये प्रदूषण हमारे लिए जानलेवा हो सकता है। एंटी स्मॉग गन्स काफ़ी बड़े स्तर के ऊपर जगह जगह लगाई जा रही है ताकि इसको रोका जा सके, और भी बहुत सारे कदम उठाए जा रहे हैं एंटी डस्ट कैंपेन के तहत।
Time will never come back. That was indeed a heaven view. There was less pollution, but now festive season is coming closer day by day, and again there will be same pollution, same problem.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
We're seeing advanced economies doing better than emerging and developing economies, excluding China. Within countries, it's uneven. You're seeing low-skilled workers, youth, women doing worse in labor markets. So we're seeing rising inequality. This is why we describe this as a long, uneven, and highly uncertain ascent.
Gita Gopinath, out in front of the Blue Book. It is something I read. I read the executive summary, every word. I try to dive into one or two of the appendices, as they say, as well. Terrific work by the IMF. They're like a pinata. They get beat up constantly. And the fact is, the Blue Book, the Green Book, the Red Book are just really required reading. I should point out, Francine Lacroix in a conversation with Ms. Georgieva today. Look for that along the way. Right now, Isabel Mateo-Silaga with us with BlackRock. Global head, I love this title. Are you kidding me? Global head of official institutions group. That means she's a big deal. That's all you need to know. And she joins us right now. Isabel, one of the great juxtapositions we have is technological innovation, as we see by Apple. We're in the middle of Amazon Prime Day. We've seen the NASDAQ 100 go up, up, up. And Dr. Gopinath addresses massive global inequalities in a moldy 2021. When does that break? When do we break the elite outperformance of technology from the observation of a world that's really struggling?
Well, good morning, Tom. I think, look, it's the job of the IMF to focus on what's not working, where are the vulnerabilities, where are the problems. But in reality, the IMF outlook released yesterday was obviously, better than the June one. I think they were catching up with the consensus there in saying actually the shock is not as bad as we feared. And frankly, we are now fully in this reflationary reopening stage of the economy where you should see less of an outperformance of those few tech stocks that have benefited so much from the lockdown and the need for everybody to do everything online, work, consume, entertain themselves, etc. And if anything, if you're looking at recent investment flows and investor conversations, people are now warming up to small caps, cyclicals, things that tend to do well in phases of reflation and expansion. So if anything, this disconnect, this discrepancy should tend to narrow as we go forward.
How do we warm up to bonds and debt near the zero bound or beneath the zero bound? How do we sustain our interest in these low coupons?
Well, I think we don't. I think, look, you obviously always need some safe government bond in any portfolio, but the notion that they're going to play as big a role as they did in the past when rates were much higher and you had both yield and protection, that idea is fanciful. And in the future, it's very clear that you're going to need to look elsewhere for both yield and for resilience. And that's what we're seeing global investors, large asset owners doing. They're moving away from the traditional safe havens into illiquids, into alternatives, into Chinese bonds, which are perhaps the only ones yielding, meaningful rates.
I don't know whether you do go into Chinese bonds, Isabel, but where do you find yield?
Well, that's exactly the tough question that a lot of asset owners are grappling with. It's very easy where you find yield. You find it in high yield bonds, you find it in emerging markets, and you find it in China, which obviously is an emerging market. But for a lot of asset owners, these are investments that they would never have contemplated historically because of their risk parameters. And likewise, for a number of them now contemplating investments in liquid assets. These were things that they would have thought were completely off limits in the past, and now they have to be on the table. Or even equities for income, focusing on dividend yielders. Portfolio construction is being completely, taken back to the drawing board because people understand we're going to face these low interest rates for a long, long time into the future.
But Isabel, what's the biggest worry then? That actually there's too much risk into, even parts of the market which is not as regulated as others, and that could be dangerous for some kind of meltdown? Or that some of the risks that could materialize, some of the downside risks that we've been talking about in the world economy materialize?
Yeah, I mean, that's clearly the risk, right? Right now, the base case is, we're now, deep into the second wave of the pandemic, or entering into it, but we're beginning to see light at the end of the tunnel because, progress on the vaccine and treatments and economic reopening. Yes, we're going to see more restrictions, but hopefully we'll be able to avoid going back to full lockdowns. So it won't be a straight line, but the path is up. The risk is obviously that there's a major setback in the search for a vaccine or a cure, or that policy stimulus, which remains so essential, and the IMF was very clear about that in both the WEO and the GFSR. If there is policy fatigue and this policy support fades, then we're in a much more dire scenario, and that's not what the markets are pricing. The markets are pricing that, yes, we're seeing light at the end of the tunnel. So that's where I would see where I would tend to see the biggest risk.
Isabel, outside your purview, but it was $7 trillion plus of assets yesterday announced at BlackRock, which simply identifies an industry and a global financial system up to its eyeballs in liquidity and money looking for a warm spot. Is that ultimately what drives assets, what drives intangible investment? Is the money's got to find a warm place?
Well, I think, yeah, you're putting it in a slightly dismissive ways, but that is the way finance works, and it's for the better. Frankly, the fact that asset owners are trying to get yield, to get returns in line with their mandate, and thanks to that, you're seeing capital flow back somewhat to emerging markets who direly need it. You're seeing money flow back into corporate bond markets. Corporates need the money to stay afloat and to invest into the future. So yes, money needs to flow to where the opportunities are, but I wouldn't see anything nefarious about that.
Isabel, thank you. Well, let me squeeze in one more. Well, I guess you're going to stay with us, Isabel. I'm sorry. I'm trying to figure out what the hour is doing here. We're going to come back with Isabel Mateo-Silago of BlackRock. I really want to focus there on the United Kingdom and some of the challenges Francine's noting today on trade and dialogue across the Channel and across the North Sea. Right now, with our first heard news in London, Leanne Gerrans.
Hi, Tom. President Trump is battling Democrats and Republicans over a proposed stimulus package. He is telling Senate Republicans to, quote, go big or go home when it comes to a proposal. But Majority Leader Mitch McConnell is only promising a vote on a paycheck replacement plan for small business. Meanwhile, House Speaker Nancy Pelosi says the White House plan comes up short. She's demanding significant changes. Supreme Court nominee Amy Coney Barrett avoided any major slips in a day of questioning on Capitol Hill. Senate Democrats asked her about abortion rights, healthcare law, guns, and election disputes. Still, they made little progress, derailing Barrett's likely Senate confirmation. The UK is signalling that it will not walk away from trade talks with the European Union immediately. Prime Minister Boris Johnson has set tomorrow as the deadline for an agreement. Still, negotiations are expected to keep talking past then. Johnson and European Commission President Ursula von der Leyen discussed the impasse today on a video call. And Russian President Vladimir Putin and Saudi Crown Prince Mohammed bin Salman are urging OPEC and its allies to stick to agreed production cuts. That puts pressure on those members who have not been living up to their promises. Oil prices are barely above $40 a barrel, and new coronavirus outbreaks are hurting demand. Global news 24 hours a day on air and at Bloomberg Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Tom.
Leanne, thank you so much. Again, futures up nicely. Futures up 9. It is banking season. We'll do the round again here. 6:45. Bank number 42 comes out with earnings, and we'll look at that. This afternoon, a conversation with the chief financial officer of a challenged Wells Fargo, John Shrewsbury. Look for that as we do definitive work here on the banks, the prospects forward on the income statement, the prospects forward for their stocks. This is Bloomberg. Good morning.
When opportunity knocks at the door, don't say, blimey, I've still got my pajamas on. Say yes to stuff and it will take you interesting places.
We're clearly going through some very unusual times and, enormous difficulties getting groups of people to agree on things.
From Bloomberg's European headquarters in the City of London, join us on Leaders with LACWA.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
There's no longer time to give this Prime Minister the benefit of the doubt. The government's plan simply isn't working. Another course is needed. That's why I'm calling for a 2 to 3 week circuit break in England, in line with SAGE's recommendation.
Well, that was the UK Labour leader, Keir Starmer, calling for a second national lockdown in the UK to combat rising coronavirus cases. We're back with Isabel Mateo-Silago of BlackRock. Isabel, part of the story is, of course, Brexit. We have that self-imposed deadline tomorrow with now a softening of the stance from the UK side. And then we have this lockdown, which unclear whether there will be, a lockdown for a very brief period, like many people and many scientists are calling, to break the short circuit. What's your take on UK assets right now?
UK assets are in a difficult place for exactly the reasons you mentioned, plus the impact of the pandemic, even without going into further lockdown. But I think it's in the price. It's not like the market is wildly optimistic about either the chance of avoiding further restrictions or that magically expects that a deal is going to come out of a rabbit hat at the end of this week. So UK assets, a lot of uncertainty, no massive over or underpricing, I would say at this juncture.
Do you look at negative rates as something that could happen in the UK, looking at examples around the world, or is it something that actually, could push investors to the brink?
No, I think the Bank of England has certainly done a good job of preparing the investors' minds for this. And initially, I think it really did come as a big surprise that the measure was even being contemplated, because it was such a departure from past pronouncements. But yes, that is something that I think investors definitely think could happen. Probably not this year, but if the economic conditions worsen, I think investors are prepared for it. They're not happy about it, but this is definitely something that is now understood as being part of the toolkit.
Isabel, where's the 3-year opportunity here? On a strategic basis, looking out 3 years with the back and forth of the continent in the United Kingdom, where's the investable opportunity?
Well, actually, we're feeling quite good about Europe right now, which, you know, is obviously struggling with the second wave at this very second. But if you look further out, even without going as far as 3 years, you have, for the first time in I don't know how long, fiscal and monetary policy working in tandem, working to support each other. You know, after wishing it to happen for so long, it is finally happening in Europe, whereas it isn't to the same extent in the United States. And Europe has put in place, in the form of the recovery fund, really the tools of rebuilding better after this crisis, having a stronger economy, having more cohesion across the different countries. Now, we don't know for sure that it's going to happen, but frankly, the political calendar doesn't look too bad either. When you look at, you know, the support for populist parties across different countries, it's not increased significantly, or in some countries it has even fallen, despite the hardships caused by the pandemic. So both on the political front and the economic front, Europe seems to be on a pretty good trajectory. And then going out further to 3 years, as you said, it's very encouraging to see that there's so much emphasis already on rebuilding better, on accelerating the reaching the net zero targets, on focusing more on infrastructure, focusing more on human capital. Now, some countries will just talk about it, others will actually implement it, and I think that's what will be important to look at. But on a 3-year horizon, there's every reason to be optimistic.
Thank you so much, Isabel Mateo-Silago there, BlackRock Global Head of Official Institutions Group. Now, coming up a little bit later today, the SEB Chief Executive, Johan Torgeby. That's at 11 a.m. in New York. That's 4 p.m. in London. And, of course, the major focus will be on our economies and getting back to work. This is Bloomberg.
Ada 3 kelompok pengungsi tersebut yang sudah berpencar arah. Kemudian kami dari Polsek Banda Sakti berkoordinasi dengan perangkat desa Kampung Jomblang melakukan upaya pengumpulan secara persuasif serta minta tolong kepada warga. Alhamdulillah warga yang terpecah semuanya berkumpul.
The Boston Symphony Orchestra presents BSO at Home. While you stay inside, enjoy a curated collection of archived concerts and behind-the-scenes stories from BSO musicians. BSO Homeschool provides lessons for music lovers of all ages. New performances and messages from musicians are added regularly. Enjoy these selections and much more at bso.org/at-home.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
This is Bloomberg Surveillance. I'm Leanne Gerrans with this Bloomberg Business Flash. Apple's new line of iPhones are winning praise for its lower prices and new sizes. The company showed off 4 versions of the iPhone 12 at a virtual event. The prices began at $699, and the top version has Apple's biggest screen yet, 6.7 inches. Wall Street expects the iPhone 12 to kick off a new cycle of sales growth for Apple. Now, Raytheon has started job cuts for salaried workers at its Pratt & Whitney jet engine unit. The company is preparing for a long slump in sales and repair work. The cuts are part of Raytheon's plan to get rid of some 15,000 jobs in its commercial aerospace business. Those include Pratt and supplier Collins Aerospace. And Bloomberg has learned that China's Tencent plans to increase its stake in Universal Music by another 10%. Last year, Tencent led a consortium that bought 10% of the world's largest music company from France's Vivendi. The deal included an option to double the size of the stake by next January. And that's your Bloomberg Business Flash. Francine.
Thanks so much, Leanne. Now, prioritizing climate change and digitalization can help support the global economic recovery. That's the message from leading figures in the financial world. And yesterday, we spoke to the IMF Managing Director, the Angolan Finance Minister, the BlackRock Chair and Chief Executive, Larry Fink, and Mark Carney, the Finance Advisor to the UK Prime Minister for COP26. And, they were quite hopeful that a lot was being done because of this transition to build a better future.
We can move the economy towards low carbon, climate resilient by investing in green and resilient infrastructure. We can advance digitalization, which is actually happening. This is the big winner of this crisis. And we know that digital transformation allows us to accelerate going green. So the question for us is how to focus on what is top of mind of people. Jobs, top of mind. Well, we can create green jobs, and our recent research shows that if we direct the stimulus to be oriented to green infrastructure, it will be fantastic for jobs. We can get 33 million jobs on the basis of making the stimulus green. Secondly, people are worried about the accordion of inequalities opening. If we do not digitalize everywhere, that would happen. So if we want to give opportunities to people, we have to go digital everywhere. And I would say for sure, people worry about inequality growing. And that is something that, again, connecting these dots can help us prevent from happening.
Mark Carney, do you see much more interest when addressing climate change because of the crisis? Or at certain points, has it taken a bit of a backseat?
No, I would. I'd actually pick up where the IMF Managing Director began, which is that I think there was a question initially when the crisis hit, but very quickly it was recognized that there were parallels between what happened with COVID, the importance of resilience, the importance of preparation, and that's sort of on the defensive or risk management side, but then much more positively, the need to build forward better, as the IMF has been saying, and the importance and really the opportunity that comes from moving towards a more sustainable economy because it is more capital intensive, it's more job heavy, a number of the programs that need to be put in place. Now, the challenge for policymakers, particularly policymakers like the minister, is to manage support for individuals and companies in the height of the emergency and transition to sustainable growth going forward. But I would say the interest is absolutely there. It's a policy imperative, and as I'm sure Larry and others can, and particularly Larry can speak to, within the financial sector, the interest that in many respects he began has gone mainstream.
Minister, if you look at Angola, it's one of the countries that actually has been hit the most because you're dealing with what everyone else is dealing: COVID-19, the pandemic, lockdowns, plus the oil price really collapsing. How do you look at your priorities for the next 12 months?
So first of all, we need to make sure that we survive, that we preserve almost lives as possible, and that we make sure that our health system do not collapse. It's also a priority to make sure that our debt remains sustainable.
Tom, Larry Fink at some point was actually, quite funny because I kept on asking him, are we just too optimistic? Are we too optimistic? And he says there is a danger that we're having a Pollyanna moment. And I think the one thing is timeline, Tom. So if you transition the economies, sure, that's fine, but you need to do it quickly because otherwise you're just overcome by events. So I don't know if there's a window of 12, 18 months where they really need to do the hard work, policymakers, but it's something that we need to watch out for. Coming up later, we'll also speak to the IMF Managing Director again.
Very good. Moving forward on those Pollyanna moments on Green on the Screen and the equity markets, David Pearl of Epic Investment Partners, an important update. Stay with us with futures up 10. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
When everything around us, including the way we work and live, has been interrupted, uninterrupted service is peace of mind. Juzi from customer support is responding to a 500% increase in daily call volume, no matter what. We keep on, so you can keep on.
This morning, it is a 2020 of digital dominance, and NASDAQ 100 less than 2% from a record high. Apple, a $2.1 trillion company. And in New York City, they're all leaving. Baloney, big tech, employs 22,000 and counting. It is October, and all the virtuous meet in virtual meetings, including Francine Lacroix. She will speak today to the managing director. And, well, in Pennsylvania, the president must get back on script. Mr. Biden is a, quote, servant of the radical globalists. And in the land of Mar-a-Lago, Biden says Trump is the only senior Trump cares about. Things are heating up in moments. Cirilli, 20 days to go. This is Bloomberg Surveillance. Good morning, everyone. From New York, Tom Keefe, Francine Lacroix in London. Francine, we're seeing headlines out. I mean, is the prime minister like, this is the day where he like meets and greets the European Union?
Yeah, Tom, I was going to say, I'm just here to bring you up to date with, Brexit and torture you with the latest headlines. So there was a self-imposed, if we just go back, Tom, deadline of tomorrow.
Yeah.
And the Prime Minister had said that if there was not sufficient progress in talks with the EU by the 15th of October, he would walk away. That would mean on December 31st, a no-deal Brexit, a WTO agreement, walking out. And we understand through our sources that he said, no, they won't walk out immediately. We know he's also picking up the phone to the president of the Commission, von der Leyen, but this is all negotiations in the backhand to see whether they can try and find an agreement before the deadline.
In a busy hour, Francine, I want to get this in. You will speak with the managing director of the International Monetary Fund. I was surprised yesterday in improvement to their 2020 view, but challenges to 2021. Yeah. What's your major theme with Dr. Georgieva?
I think it's really that. It's to see whether some of the downside risks that we've seen to the economy because of potential extra lockdowns and restrictions will actually materialize. So even if she sees a slight pickup, and this is maybe because the rebound was earlier than thought when we opened our economies, it's what brings winter with the number of infection rising and the slowdown in, vaccine trials.
Yeah, we'll see. Futures up 10, Dow futures up 83, NASDAQ up 0.2%. With our first word news at Queen Victoria Street, here's Leanne Gerrans.
Good morning, Tom. Prospects for another stimulus package before Election Day look bleak. President Donald Trump and Senate Republicans are at odds. The president is urging them to go big or go home, but Senate Majority Leader Mitch McConnell is only committing to a vote on the paycheck program for small businesses. Meanwhile, House Speaker Nancy Pelosi is demanding the White House revamp its latest offer. She says it's not big enough. Meanwhile, the world's top central banks are urging governments to keep spending. They say that concerns about mounting debt should be put aside until the economic recovery from the coronavirus is complete. The IMF is normally a champion of budget restraint, but the fund agrees that it is too early to end support. Now here in the UK, there's growing pressure on Prime Minister Boris Johnson to order a so-called circuit breaker lockdown. The opposition Labour Party and government scientists say it is needed to get the coronavirus under control. Deaths have soared to their highest levels since June. Concerns are mounting that Johnson's new system of restrictions are not enough. And Russia has ruled out a deal with the US on nuclear weapons before the presidential election. The deputy foreign minister dismissed a call by Washington for a freeze on their arsenals as unacceptable. The latest agreement limiting the nuclear weapons of the former Cold War opponents expires in February. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Tom.
Leanne, thanks so much. Looking at futures, green right now, no question about that, with a nice lift. I'm not going to oversell it. Futures up 9, Dow futures up 87. That level on the Dow, 28,671. We introduce, as we can only do at surveillance, really a clear look at the NASDAQ 100. 34% is Apple, Amazon, and Microsoft. So it's a NASDAQ 100, but it's sort of really like the NASDAQ 3, maybe 4, the NASDAQ 3. And there with another lift there, 12,123, right buttressed up against new highs. I would note Turkish lira taking a dash to 8 off of missile news out of Turkey and the various military affairs there. 7.95 now on an ever weaker Turkish lira. Francine?
Tom, investors are really looking to the earnings season to provide this spark for equity markets. There seem to be these dwindling prospects for more economic stimulus before next month's election. We saw, House Speaker Nancy Pelosi demanding that the Trump administration revamp its latest offer. And so actually European stocks are barely moving. I mean, they're gaining 0.1%, but it's nothing to write home to about. If you look at some of the bank reports, okay, we have Wells Fargo, Bank of America, so they may give us an indication. And then finally, pound. I think it's quite interesting today, Tom, because its pairing declines after the UK signaled it will continue efforts to reach an agreement with the EU, and that would be beyond the self-imposed deadline of October 15th. October 15th, that's tomorrow, Tom, so they'll negotiate beyond that.
Well, they'll negotiate as well out on the campaign trail, and that would be the president and the vice president, 20 days to go to the election. Let's listen to the festivities yesterday.
So can I ask you to do me a favor? Suburban women, will you please like me? Please. I saved your damn neighborhood, okay? The other thing, I don't have that much time to be that nice. I can do it, but I gotta go quickly. We don't have time. They want me to be politically correct. Oh, yes, let's discuss it. Let's talk about it over the next 10 years. No. Now, we saved suburbia in the U.S.
I'm running as a proud Democrat, but I will govern as an American president. I'll work for Democrats and Republicans. I'll work for those who vote against me as hard as those who voted for me. That's the job of a president, to heal. It's a duty to care for everyone.
Sounds like a campaign. Thanks to all of our team, particularly Sarah, for just putting together the emotions that we saw with 21 days yesterday to go. Right now, our Kevin Cirilli, our chief Washington correspondent. Kevin, I put on a tweet 16 hours ago, and I just said WOW. It was a wow tweet, and it was maybe the most shocking research I've seen, which is the good people over at Cook, Wasserman, and Taylor ringing up 7 Democrats plus in the Senate. How did they get there to a 7 Democratic senator pickup in the U.S. Senate? That just stuns me.
Well, Jessica Taylor nails it in the sense that she reports on the Affordable Care Act and Obamacare. Now, what once was a winning issue for Republicans, flash forward 4 years later, where the constitutionality of the Obamacare court ruling hangs with the Supreme Court in early November. This has really been a missed opportunity based upon the conversations that I have for Republicans to replace the health care with something of an alternative. But that's on full display in the ACB Judge Amy Coney Barrett confirmation hearings in the judiciary. Look, just you and I were talking about this before we got on air. Just a couple of months ago, this was unimaginable.
Yes.
To see Democrats actually be able to take the Senate, just, unimaginable just a couple of months ago. And that's really fascinating to watch all of the outside money flood into the Dirksen building for Judge Amy Coney Barrett on Capitol Hill and say, you know what, maybe this is our last hope in the short term is to get another judge on the Supreme Court.
And I want to make clear, folks, particularly those international, this is not a 7-seat majority. It's a pickup of 7 seats, which ends up being a different math. The other thing, Kevin, I want to look at, and this is in your wheelhouse, is Corasaniti and Lou over at the New York Times with a spectacular effort, again, off Cook Political Report, of the voting, of how they open the envelopes. They open them now. They open the envelopes X number of days before the election. Or Pennsylvania, Wisconsin, Alabama, and Mississippi open the envelopes on Election Day. What's going to happen in Pennsylvania at 11 a.m. the Wednesday after the election?
Well, it's a mess. I mean, and you've seen not just in Pennsylvania, but in the other states you just mentioned, where the state legislators are trying to have different types of rules up until the last minute. It's a court battle. And yesterday, I keep bringing it back to Judge Amy Coney Barrett because it's really the microcosm of everything happening on healthcare and on the rulings with the Supreme Court with regards to the election. She was asked point blank by Democrats, will you recuse yourself from an election case should it get to the Supreme Court? And she did not take the opportunity to do so. Now, Republicans would say she shouldn't do that because you've got to have a full bench. But you raise a really good point, which is that these state laws, it's a patchwork of state laws, and they're all different. And, it's on a collision course with the mail-in ballot.
Kevin, can I just go back to something that you said, just to make sure that I and our viewers, international viewers understand? So, you say this blue wave that we're talking about would have been seen as unimaginable even 4 or 5 weeks ago. What exactly has changed? Is it all COVID and the outbreak in the White House?
Yes, it's COVID-19. It's the president trying to win over not just suburban women, but also senior citizens. Look, I'm not in the business of making predictions, but I can tell you that Democrats really feel that they have an opportunity to take over all 3 branches of government, that it is within striking distance. And should Republicans be able to hold on to the Senate, it's going to be a fight to do so. I think if it will definitely come down to a turnout election, but the policy implications of there being a blue wave would be significant. And it would have long-lasting implications in next calendar year about what a 2021 recovery would look like. And quite honestly, it would be a lot different than a 2008 recovery, simply because of the precedents that they feel that they would have, and the commanding ruling from voters.
Kevin, is there any way that the Republicans can turn this round if the narrative changes, which is difficult at the moment given what we're living through COVID? But if it focuses on taxes, will it turn people off voting for the Democrats?
Well, exactly, and that's why I'm so cautious to say that on the issue of the economic recovery, it's a blanket issue. Like I said, economic recovery, fracking jobs are so incredibly important in the state of Pennsylvania. I mean, you get out there and you're against fracking, you're against jobs. And so that's really, I think, a really important point for Pennsylvania. I mean, you can be for the environment and also for fracking, but that's a really nuanced message in a state like Pennsylvania. And you don't have to have an Ivy League degree to know that. And then also, I think if you go to states like Michigan, Florida, and Wisconsin, the president has struggled with senior citizens, but he's going to draw a contrast in terms of what a recovery down there would look like, especially as it relates to some of those environmental issues and Hispanics with regards to Catholic Cuban Americans.
Kevin, thank you for the update. Kevin Sturley, their Bloomberg Chief Washington Correspondent. Now, coming up on Bloomberg Markets, the IMF Managing Director, Kristalina Georgieva, a conversation, of course, about what we're seeing in terms of lockdowns, the economy, but maybe we'll also touch on the U.S. election. That interview, 10:30 a.m. in New York, 3:30 p.m. in London, and this is Bloomberg.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Good morning, everyone. Bloomberg Surveillance, Francine Lacroix and Tom Keene. Busy day, lots of different themes, just doing the politics with Kevin Cirilli. Right now, we're going to get back to what we did Monday, Tuesday, which is the equity markets. David Pearl joins us, Epic Investment Partners, of course, with real money at risk. David, I want to redefine right now the growthiness of this market. We're looking at the NASDAQ 100 right now, just ticking red on the screen, but up, day after day. And I get the rotation debate, and I get the small cap international debate as well. Redefine right now what growth means.
Well, what investors have decided is that we're in a very slow recovery, and what you want to own in a low interest rate, almost zero interest rate environment in a slow recovery are growth stocks. The question is, what is a growth stock? And, you know, in our view, a company that grows has to grow profitably as opposed to just growing revenues. There has been no distinction about this recently. So while we know all about the FANG stocks, and actually a couple of them really don't make that much money, if at all, it's the biotechs and things like Tesla that are actually even more concerning in the market. But it's easy for a retail investor who doesn't understand fundamentals, profitability, or finance in general to buy something that at least they know what the product is and they know it's growing revenue. So unfortunately, for us investors, this is like a drunken party. Reminds me very much of the dot-com bubble, and being sober is no fun at a drunken party.
We had sober results from J.P. Morgan and Citigroup yesterday. More to come today at 6:45, folks. Here in half an hour, we'll start in the bank ballet again. The polarity there seems to be worry about credit losses, commercial real estate, et cetera, charge cards, whatever, but also executable excellence as well among selected banks. Which way do you tilt?
Yeah, well, when you saw J.P. Morgan, it really couldn't be a heck of a lot better given the environment. They actually had to reduce provisions because a lot of their loans are actually getting prepaid. So credit quality has been holding up, particularly for most of the larger banks. The only other negative has been the flattening of the yield curve. So net interest margin is flattened, but it can't flatten a lot more. So these companies are producing huge profits, paying big dividends, and they will be buying back more stock. JP Morgan said as much. We think Bank of America is going to be exactly the same. Wells Fargo might be the singular exception because they are still turning it around a bit, but Citi was pretty good as well. So the money centers generally are going to do really well. The problem is the market is always worried about what you said, that credit will deteriorate or profitability will deteriorate, as opposed to the FANG stocks where, you know, when we talk about Apple, there was nothing that great going on, but I've been reading the spin on this. It's actually hilarious to me. You know, the major phone that replaces the iPhone 11 from last year is $100 more, but analysts have pointed to this smaller phone that they put in the lineup that is the same price and saying that was a great idea. Well, it is great for Apple, but they've effectively raised price.
But David, I mean, the overall, are you worried about valuations in the tech sector because there's a risk of them being broken up or being taxed more?
There is, but that probably isn't my bigger issue. It's that you are giving them too much of a benefit for a discounted cash flow out in a long period of time at zero interest rates. So if we get a recovery, if rates start to go up at all, and, you know, I would say even with a Democratic blue wave, you add stimulus, printing money, there will be a steepening of the yield curve that will affect the valuation of growth stocks negatively. And conversely, the stocks that have lagged, which are economically sensitive like financials or the rest of technology like semiconductors and consumer discretionary, will come, basically valuations will go back up because financials are at the lowest valuations in the market.
But as long as they sell to China, and as long as they sell more to China, more phones to China, does that not make up for it?
So the question is, how much will the Chinese buy of American products? You know, Apple has very high market share of the top end of the market. You know, you realize, you know, even the lowest Apple phone is $600. The median price of a phone is about $200 in Asia. So the mass market is not something Apple touches. So it's a matter of how well the Chinese economy is doing, how affluent they are. You know, and really almost the same for Tesla. I kind of wonder how many $50,000 cars you're going to be able to sell for the next few years.
David Pearl, thank you so much. Too short a visit today. We'll do it again longer. David Pearl of Epic Investment Partners as well. Futures up 1. We pulled back a little bit here. Now I'm going to call it a churn to the market. Actually, the NASDAQ coming back as well, just up a single 4 points. Yields have come in 2 days in a row. I do want to make out the 30-year bond 1.49%, and that's in another 2 basis points today as well. Coming up on Bloomberg Markets, again, the Chief Financial Officer of Wells Fargo. There is a little bit to talk about with Mr. Shrewsbury, the 4 p.m. hour. Stay with us from London, from New York. This is Bloomberg.
their CPG history, their experience, and really how we might be able to combine together to really create this fantastic public company. And so we kind of got into the SPAC thing a little bit before it became such a hot method of going public.
The This is Bloomberg Surveillance. I'm Leanne Gerrans with this Bloomberg Business Flash. You won't be seeing massive crowds at Walmart on Black Friday. The world's biggest retailer will limit the number of customers inside its stores to just 20% of usual capacity. Other changes include sanitized carts and directions to help shoppers avoid each other while browsing. And Apple's new iPhones are winning praises for lower prices and new sizes. The company showed off 4 versions of its iPhone 12 at a virtual event. The prices began at $699, and the top-of-the-line device has Apple's biggest screen yet, 6.7 inches. They are Apple's first 5G phones.
Each generation of cellular network technology on iPhone has enabled breakthrough innovations and entirely new opportunities for our developers and our users. And 5G is the most exciting step yet. For so many people, this all becomes real with 5G coming to iPhone.
Wall Street expects the iPhone 12 to kick off a new cycle of sales growth for Apple. And that's your Bloomberg Business Flash. Tom.
Leanne, thanks so much. Looking at the data here, we pull back here to like a churn to the market. We're going to get red and green on the screen here in a moment. Very quickly, oil, $40 a barrel on American oil. Brent crude, $42.29. And we battle at $1,900 the ounce on gold. Francine?
Tom, I'm looking, of course, at Europe, and I'm looking at pound because we have this Bloomberg scoop saying the UK won't walk away from the EU trade talks immediately. That's moving sterling a touch. Overall, we're waiting for a lot of the earnings to come out, which is why stock markets are actually moving sideways. Coming up next, we talk COVID-19, we talk restrictions, we talk lockdown with Lauren Sauer, Johns Hopkins Assistant Professor of Emergency Medicine. That's coming up shortly, and this is Bloomberg.
Some things you see coming, some things you don't. The trick is to be ready for anything. John from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
give you a sense of the real-time action. The 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
This is Bloomberg Surveillance. Tom Francine from London and New York. Now, as we continue to track the virus, Bloomberg has developed a unique partnership with the leading authority on COVID-19. Johns Hopkins has been at the forefront of the international response, and every day we bring you insight from experts in public health, infectious disease, and emergency preparedness. Joining us today is Lauren Sauer, Johns Hopkins University Assistant Professor of Emergency Medicine. Lauren, thank you so much for joining us. There's a lot of talk about some of these vaccine trials, some of the setback that we've seen because certain people have fallen ill. Is this a good or you know, a bad thing?
Yeah, I think it is a good thing that we're seeing this process play out the way we want it to, the way it's written on paper that it should. I don't think we'd want to get to the end of this process and have a series of therapeutics and vaccines that have seen no adverse events, because it means our threshold for what those adverse events are is not strong enough. And so what we're seeing is the process that's in place playing out the way it should to ensure that when we get to the end, we know that we have a safe and effective product that we can distribute to Americans.
What is the communication needed around that? Or, you know, you were talking to me also in the break, we're saying we've never really followed these trials so closely. Who's the best person to communicate this to the general public?
Yeah, I think that that's where a lot of the work has to happen. So the public is not used to, you know, hearing all the ins and outs of this process and every single adverse event being reported in national news and making, you know, primetime national news. And so ensuring that we're working with the community members who are going to be taking the vaccine, taking the vaccine or taking the products, and working with communication groups who really understand how you talk about risk, how you talk about the process, working with people who've spent their whole careers on the best messaging and the best communication strategies for this is absolutely critical.
Is the virus less deadly than it was 3-4 months ago?
I don't think I'm the right person to speak to that. I think that there's plenty of virologists who've been doing a lot of work on that piece. But what I will say is I think we're getting better at taking care of patients who've been infected with the virus. And so perhaps outcomes are looking better. I don't think we've seen a lot of mutation in this virus to warrant saying that it's different or less deadly. But we as a system, especially a healthcare system, have gotten better at ensuring that when people get infected with the virus, they get the best care. We have new strategies for their care. We have new therapeutics coming online and getting them out of the hospital and safely home.
Lauren, going back to the vaccine and, you know, some of these trials being halted, is there a feeling that actually, you know, political pressure is overwhelming some of the scientific rigor that is needed?
I think we were all feeling that way a few months ago and into last month. And the companies actually stepped up and said, you know, we will not cut corners on the scientific rigor. I think there is a bit of worry that the emergency use authorization mechanism, which allows it to move products faster to the public, may have lowered the threshold for a company's ability to obtain that tool or obtain that classification, and that may reduce the likelihood of people enrolling in clinical trials for these very same therapeutics and vaccines. So I think that's the piece we really have to watch, making sure that we don't overuse the emergency use authorization mechanism and making sure that we can really complete all of these clinical trials that we're going through so that when we get to the other side, we have really strong therapeutics, we have really strong vaccines that the public is willing to take and use.
How much is being done to really understand, you know, how we distribute the vaccine once we have the formula?
There's a lot of work in that space right now, and I think there's people who've spent their whole careers studying the most appropriate approach to this scarce resource allocation mechanism. So targeting frontline responders, targeting the most vulnerable of our populations. There's agencies who are really focused on this question. And I think we have to pay really close attention to it, because not only are we going to prioritize people who most need it, but these also might be the people who are most at risk, and some of them are absolutely critical to the response. So we don't want to put anyone at higher risk than they absolutely have to be, and we want to make sure that the vaccine strategies for distribution protect the most in the shortest amount of time.
What does Trump's illness actually, put the spotlight on? I know there was a lot of focus on some of the antibody drugs that he also touted as a great success. Is there going to be a lot more work done in that field?
I think there's been a lot of work done in the antibody field, and we'll continue to see the development of monoclonal antibodies for, myriad different diseases. I think it's great that it puts the spotlight on this type of therapeutic, but they're expensive and they're hard to produce, and they're hard to distribute. So I think focusing on that element will be absolutely critical. I also think it highlights the disparate levels of care in America, and that'll be something that's really important to focus on. So he got every therapeutic that was available. He got medevac to Walter Reed. He got transported and cared by some of the top clinicians in the country, including one of our own. And it is fantastic to see that happen. But we also have people dying every day of this virus because they can't either access care or they have underlying medical conditions that limit their ability to recover from the virus. And so I think it really does highlight the disparate levels of care in America and the disparate levels of access to care.
Lauren Sauer, thank you so much of Johns Hopkins there. Be sure to check out VRUS Go on the Bloomberg terminal for the latest information. And you can also tune in every day for our exclusive conversation with Johns Hopkins experts for an inside look at battling COVID-19. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. President Trump is battling Democrats and Republicans over a proposed stimulus package. He's telling Senate Republicans to, quote, go big or go home when it comes to a proposal. But Majority Leader Mitch McConnell is only promising a vote on a pay packet replacement plan for small businesses. Meanwhile, House Speaker Nancy Pelosi says a White House plan comes up short. She's demanding significant changes. Now, Supreme Court nominee Amy Coney Barrett avoided any major slips in a day of questioning on Capitol Hill. Senate Democrats asked her about abortion rights, healthcare law, guns, and election disputes. Still, they made little progress, derailing Barrett's likely Senate confirmation. The UK is signalling that it will not walk away from trade talks with the European Union immediately. Prime Minister Boris Johnson has set tomorrow as a deadline for an agreement. Still, negotiators are expected to keep talking past them. Johnson and the European Commission President Ursula von der Leyen discuss the impasse on a phone call today. And Russian President Vladimir Putin and Saudi Crown Prince Mohammed bin Salman are urging OPEC and its allies to stick to agreed production cuts. That puts pressure on those members who haven't been living up to their promises. Oil prices are barely above $40 a barrel, and new coronavirus outbreaks are hurting demand. The New York Post says that emails from Hunter Biden show that he introduced his father to an executive at a Ukrainian energy firm. Joe Biden was vice president at the time. The meeting is said to have taken place. The Democratic presidential nominee has said he never discussed his son's business dealings with him. Global news 24 hours a day, on air, and a Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thanks so much. Coming up next, Jared Cassidy, RBC Capital Markets Head of U.S. Bank Equity Strategy and Large Cap Bank Analyst. We'll talk about bank earnings shortly. This is Bloomberg.
Women leaders were actually better at controlling the deaths from COVID-19. Do you think out of this pandemic, we'll see more countries be willing to elect female leaders?
When we look at women leaders, we tend to project on them baggage that they shouldn't bear.
Women are given an opportunity when no one else wants to do the job.
Women had a very clear objective
They wanted to save lives.
The women leaders, if you look at their careers, have also built up a level of trust.
In fact, women have to be better at communication in order to be elected as leaders, whereas this doesn't hold true for men.
We need to get those sexist stereotypes out of our head and give women a fair run for leadership.
Trying to change the stereotypes about women is not only the business of women, but men have to be part of it.
When everything around us, including the way we work and live, has been interrupted, uninterrupted service is peace of mind. Kimmy from customer support is responding to a 500% increase in daily call volume, no matter what. We keep on, so you can keep on.
About the outlook. This is Bloomberg.
Good morning, everyone. Bloomberg Surveillance. Francine Lacroix in London. I'm Tom Keaton in New York. And now we consider the banks as well. Let's get right to it. Bank of America. Gerard Cassidy with us with RBC Capital Markets. Gerard, for our non-pro audience, what's the difference between Bank of America and JP Morgan?
Tom, there's really not too much difference, actually. Both of them are considered to be universal banks, or what you and I might recall from years back, money center banks. Obviously, Bank of America is headquartered in Charlotte. JP Morgan's in New York. But when you look at the mix of business, there's really not too much in differences. The one difference I'd highlight for you is the amount of revenue coming from outside the United States at Bank of America is around 10%. And for JP Morgan Chase, it's closer to 20%. But they both have the mix of consumer, commercial, and of course, investment banking.
Over the last 10 years, JP Morgan has outperformed Bank of America by over 300 basis points, 3 percentage points per year, roughly 12%, maybe 13% versus 9 or 10% at Bank of America per year. Was that because Brian Moynihan was handed a bigger challenge than James Dimon?
Tom, you're absolutely right. The mess that Bank of America was in 2008 and 9 was unbelievably bad. For JP Morgan Chase, on the other hand, they had challenges, no doubt about it, but they were nowhere close to where Bank of America was. In fact, Bank of America and Citigroup, back in those days, were probably the two banks that if we didn't have the government investment or bailout known as TARP, those two banks could have failed. JP Morgan wasn't even close to that. So the Bank of America, much bigger problems, and therefore it took Moynihan much longer to turn it around.
Jared, how do these banks grow in general when interest rates are so low?
Francine, you know, that is the big challenge for the group. That is why yesterday, when you saw the earnings of two of the big banks, Citigroup and JP Morgan, though the numbers were better than expected, investors read through those earnings because of the low interest rate environment and the implications of that. I think what you're going to see is you really need to see the economy come back strong. Obviously, third quarter real GDP will be a big number, but that's really not a real number considering it was compared to the second quarter number. But if we could see 3 to 4% real GDP growth in 21, loan growth should mirror that type of growth. So it really is dependent upon real GDP growth in 2021.
Are we going to be able to see with the next earnings coming up in a couple of minutes what the consumer's doing in the U.S.? Or is it just all a bit fuzzy because of reopenings of the economy that was too quick? So we don't know if people will save more in 3-4 months from now.
The consumer, believe it or not, is in good shape. Now, yes, we do recognize there's elevated levels of unemployment. And in those cases, obviously, the consumer is struggling to find a job. But for the 92% of Americans that are employed, their balance sheets are in good shape. They weren't overextended going into the downturn. This fiscal stimulus to $1,200 that many people received obviously went into their checking accounts. And so what we're seeing with the consumer right now is that they're not running out and spending their money like they normally would do during a normal expansion. And you're seeing that showing up in the credit card receivables outstanding. They're shrinking for the big banks like a JP Morgan Chase, it's because consumers are not spending as much as they were a year ago. So we really need to see the unemployment rate come down for the consumer to come back and start spending, other than housing, of course, which is very strong.
Gerard Cassidy, you were great out front on the future use of cash of these banks. I'm going to guess in 2011, 2012. A major hat tip as well to your colleague in crime, Charles Peabody, who was out front on this as well. Are we in the same spot right now where our listeners and viewers should be modeling the banks based on use of cash in 2022 and say 2023?
The big challenge, Tom, compared to that time period is today the banks don't have the steepness in the yield curve, and they don't have the higher level of interest rates. And because of what has happened, the Federal Reserve, as you know, its balance sheet has ballooned up to almost $7 trillion from just under $4 trillion at the start of the pandemic. And that, let's call it $3 trillion, a good portion of that has ended up in the industry's balance sheet in deposits. So this mix of business and the mix of the balance sheet has changed quite a bit since that prior time period. And it's really challenging the banks because of the low rate environment and the excess funds on their balance sheet.
I mean, this is really important, folks, to understand we're at the zero bound versus 2011, 2012, when we were not. So if that is the case, Gerard Cassidy, what do they do besides continue the digital transformation where they're way out front, do some international, and cut costs, cut costs, cut costs? That, to me, seems to be the only strategic plan.
Over the next 12 months, Tom, I expect to see a number of banks make announcements about cost cutting for this very reason. Because unless we get a steepening in the curve, possibly due to some elevated levels of inflation due to the fiscal and monetary policies of this country in 21 or 22, it's going to put pressure on the bank's margins. So to your point, what do you do? Cutting costs, it will be one of the strategies and probably a very big strategy for many of the banks.
Gerard, is Bank of America lending to, the businesses that it should be lending to?
The answer is yes. I've often said that, banks obviously are in the business to lend money. And every time we go into a downturn, you always hear about the banks not lending to their customers or to new customers. Credit-worthy customers can borrow money from banks like Bank of America. Now, if you're not credit-worthy, obviously they're not going to make the loan. But yes, if the customers need the money, the banks are full of liquidity, they're full of capital, and Bank of America and other big banks, or all the banks, are looking to grow their business to credit-worthy customers.
Gerard Cassidy with RBC Capital Markets. We welcome all of you worldwide. Francine Lacroix and Tom Keene as we await Bank of America. Allison Williams with us right now with Bloomberg Intelligence. And, of course, she's been way too many rubber chicken lunches with Gerard Cassidy over the years. Allison Williams, what will you look for from Bank of America? You were great yesterday on JP Morgan and, diving into certain statistics. What matters this time around?
So the number one thing, the first thing that we'll look at is obviously the provisions and not just the overall expense, but what's happening with charge-offs and what's happening with the reserve build release, and then anything we can find out sort of underlying those credit trends.
Well,
so,
Allison, let me interrupt right now because you're the one I want to talk to on this. Bank of America Q3 provision for credit losses, $5.1 billion versus an estimate just under $2 billion. That's a little different than what we saw from JP Morgan, isn't it?
That is quite